All right. So I'm still broke, and but I have friends that may not join me with the broke part, but that will join me talking about something that came up in last stream. And sorry if you guys hear that noise. I just woke up and I had to feed the dog, and so she's got water and everything, and I gotta let her out here in a second. But I got Lionel and Iori 666. Dollar will join us when he can. And essentially, we're just going to talk about cryptocurrencies and the fools that hodl them. Myself being one of those fools. Um, this is definitely one of those things where you have, just to set the stage a little bit, all markets are down. It looks like another bloodbath in so many different ways. And this, especially in the cryptocurrency space, it's reminiscent of 2017. Excuse me, end of 2017, going into 2018. You have everyone saying that this coin is going to do this coin is going to do that, and you have people talking about diamond hands, who's strong, only the will of those that really want it will survive, and blah blah blah, and all types of other stuff. And this coin will make 10x, go 10x. You're seeing all types of FUD. You're seeing all types of FOMO. You see, oh gosh, come on, dog. Sorry. You're seeing all types of FOMO. But then you're seeing things like BGS posting some recent videos. One video mentioning where a guy mentioned a possible 5-year bear market, and he won't be surprised if it goes to about 5 years in terms of the continued stagflation, the continued deflationary, or the continuing inflation, and also the lack of increase in our wages on a yearly basis. So people are, their dollar, or the value of their dollar that they're getting out of their paycheck, is just slowly getting eaten away. Anyways, with all that being said, I'm excited. If this is going to go on for another 5 years, then I believe this is going to be a great time to increase your holdings in coins that you like. With that being said, this is not financial advice. If you want financial advice, go and seek a financial advisor. There are so many places where you can find those. You can actually do that on the side of the street if you wanted to. I don't really know. But this is just guys talking about what's going on and how they feel about this current market. Dollar Will has added his Dollar Will has.
Hold on, bro. I got some audio problems. Give me. I'm gonna mute up for a second till I figure this out. Y'all go ahead. I got some technical issues.
No problem.
Okay. So, Dollar Will has come in, but with all of that being said, in that horrible intro, guys, tell me what your thoughts are. Iori, Lionel, and Dollar Will, when you get a chance. Let me know what y'all are thinking, and hopefully we can go over some of this stuff and talk about it. And I could be totally wrong, and I'll never invest another dollar in crypto. Change my mind.
I'm not going to go there. There's something interesting that happened. I was kind of following what the central bankers were saying, because this week, Jay Powell and Christine Lagarde, and Christine Lagarde is the person that runs the ECB, and the Bank of England, they all kind of had a powwow and did different things. And at the beginning, like throughout this whole situation, Jay Powell was talking about inflation being transitory, and like that was the buzzword, right? The inflation's going to be here today. It'll kind of go away later on. And it's interesting because Christine Lagarde actually said something that I was surprised with. She said, I think people expecting the old ways of doing things in terms of interest rates are kind of unrealistic in the time that we live in now. So she's saying, hey, like that 2%, 3% inflation stuff we were talking about before, I don't really know if that's going to happen. And I was surprised because 90% of the time, the central bankers kind of tell you what you want to hear so you won't jump off a cliff kind of thing. Like that's what they do, right? But it was interesting that she was actually being honest enough to say, yeah, like I really don't know whether what you guys expect for us to do is what's going to actually end up happening. And
Now, no.
Go ahead.
So the normal, I guess, the normal expectation is like a 2 to 3% interest rate hike, or a 2%.
2 to 3% inflation is what usually.
Inflation.
Yeah.
What is she expecting, or what is like? What was thought of, I should say, from that? Like, what is she really saying is or alluding to, and what are people thinking?
Okay, I'm not a central banker and I don't know what goes on in those meetings, but what I think she was saying is we're probably not going to have 2 to 3% inflation. So, what's going on? What's up, Enigma? Anyway, I think what she's saying is that this food inflation and other types of inflation are going to be an ongoing forward concern. That's what I think she's saying. But it was interesting because most of the time, even the central bankers don't say that. So
Yeah, they usually kind of hide their hand, is what you're saying.
Yeah. Usually they say, yeah, we'll take it meeting to meeting. I mean, that's what Jerome Powell's saying, right? Like we're gonna decide what we're gonna do meeting to meeting. She's basically telling people, hey, like we really don't know whether it's gonna be like this. Like
we kind of noticed that. I've seen that before, even during all of this, or during post COVID and everything like that. That they were actually kind of they weren't soft about it, and they were kind of telling like, hey, listen, this is what's going to happen.
Looks like
you still sound like you're Borging there.
I am okay.
Yeah.
A bit. Oh, okay, that sounds better. But like,
yeah, I think you still have audio problems.
Let's see. My feed is it? Are you guys feeding back from me?
No, not anymore.
It actually sounds good right there.
Okay.
You're
good.
Okay.
Good. What's happening? I'm sorry, y'all. It's just, it's that dinner got good to me right at 9 o'clock, man. It got good. I'm like having to trying to eat on a schedule to get here at 9. I'm like, oh man, this is work.
Yeah, man.
I got that free life now. I just do what I want when I want. Like that. That's what trading does. It can free you from that.
I appreciate you. What's it called? Coming when getting here when summoned, and then even myself, man. Oh, that's why. Darn it. So I had my alarm. I don't know. I woke up at 8:55 on the dot, and my alarm was set for 8:30. But it looks like it was set for 8:30 tomorrow.
Wow. I understand. What's happening, Enigma? See him in the chat. Yeah. So y'all were ramping doing on the fundamental.
Yeah.
Approach.
I mean, I just thought it's interesting that they actually said that instead of saying, "Oh, well, we'll be back next quarter to tell y'all." Like she actually said it.
So. Yeah, that's I'm so glad I got freed of that.
Yeah, me too.
I'm so glad I got freed of that crap. It's like everybody is taught that, when you're young and you want to do the right thing, you want to be responsible. So you say, let me try to educate yourself. And then people start teaching you this fundamental stuff first.
Right.
Welcome to the Matrix. You just stepped into the Matrix and you don't know it because you think everybody's doing it. And you see all these white guys with suits on and the people with the PhDs and you think that must be the way.
Correct.
And then after you've lost a lot of money and you go, wait a minute. I read all of the journals I'm supposed to read. I read the Wall Street Journal. I'm watching all the stuff on CNBC. Because I was that kid at 20, I would say from about 22, 23. I really got serious, but I was raised by a teacher, a public school teacher. My aunt raised me. I come from one of those typical black families where, you're not raised by your parents. Y'all know how we roll, okay? So I was raised by my aunt, who was a DC public school teacher, but she was now school teachers can get free magazines. Anything you want. So I got to read everything. I had Sports Illustrated and all the way from that to Money and Time and everything. So my house was a collection of magazines. So I'm reading all the financial stuff. And then when I got real serious at 23, and it was straight up competition and insecurity when I went to my job, my first good paying job. And this white guy was 2 years younger than me. And every day he was talking to this white woman about stocks. And I didn't know anything about it. I'm into my pro-blackness, right? All of that. Shout out Howard University, And there's no way that I could convince myself that I was equal to this white man who was 2 years younger than me, 2 or 3 years younger than me. And he knew a whole lot about the stock market, and I knew absolutely nothing. I got in my feelings.
Yeah, I had a similar story myself, working in a network operations center, had my own business. I always believed in business, and not really into the markets, didn't know how to get it. But then you always had this one coworker, younger white guy, and he was really heavy into it, got a house before me and everything. Right. And he was like, Nvidia this, and getting into this stock, that stock. And then I just started getting into cryptos a little bit later. But I had a similar story, man. I had a similar story even with how I started with computers as well, where they always had better computers than me, and I had to build my own and stuff like that. But go ahead.
Yeah, I mean, I never thought that they were really I didn't have that inferiority kind of thing, because I was always like somewhere near the top of the class in every school I ever attended until I got to Howard. Those some smart Negroes. I wasn't at the top there. I'm like, whoa. I'm like, okay, now I really have to work. Right. Whereas all through life up to that, I could wait, a day or two before, the paper is due, and I could do it and get an A. Knock it out real fast. I couldn't do that at that level. But anyway, so this guy knew. Seemed like he knew everything. So I just my ego couldn't handle that, and I said I got to do something about this. I didn't know anybody that knew anything about it. Nobody in my family knew anything about it, and I was like, "Whoa, we got a problem here." I came face to face with our financial illiteracy as a race when I didn't even know anybody that knew, and I was firmly black middle class. Raised by a public school teacher and a mail carrier. So a federal government benefits and DC benefits. So, but still, they didn't know anything about the stock market. And so I took myself to Barnes and Noble bookstore, and I went to the finance section, and I said, I'm coming out of here with some books on the stock market. And I found a little book that said how to read the financial section of the newspaper. Mm-hmm. And so they had this little coded symbol in the newspaper for the stocks and stuff like that. And so I got the books and I started reading. So I'm doing all this stuff, and it's telling me all this fundamental analysis stuff. And I'm reading, I'm reading Black Enterprise. There was this very good black magazine that back in the day called American Visions. It was awesome. And so, of course, I came across Dr. Boyce Watkins. So I knew of Boyce Watkins long before YouTube and the modern internet was ever invented. Because he was one of, say, maybe like 2 or 3 black folks, honestly, in all of America, who was banging the drum on this Black financial literacy thing. So whatever you think of Boyce Watkins, and he can be criticized for some of the stuff he's saying now, you got to give that brother that credit and tip your hat to him on that, because nobody, there was this other woman, I think her name Michelle Singleton or something like, I think she's with Terry. What's the sister Terry that does finance stuff? I think he's with her. She was out there too. Yeah, it's a woman with her who's like a finance journalist. I remember her too. So it was only like really like 2 or 3 Black folks really banging the drum hard for Black folks to get their knowledge up about the stock market. But they also were coming from the fundamental side. And it wasn't until that crash of the tech bubble implosion, you know, I bought a mutual fund that had a lot of just a little bit better than penny stocks in it that were internet based, and I caught it at the right time, just dumb luck. My retirement account had gone from, on my job, had gone from like 50,000 to 250,000.
Wow.
Okay, and I was nowhere near 30 years old yet. I thought I was going to be like retired soon. I thought by 30 I'm going to be retired, because that was like the Bitcoin for me. So when everybody's going through with Bitcoin, they say nothing's never been like this before. Yes, you just haven't lived long enough. There's always been bubbles, okay? This is just the bubble of your life, but there's always been these bubbles. And the .com thing, that was my bubble when I was in my say less than 20.
You know what's crazy about that is like you start to get into a back and forth with people where it's like my bubble's bigger than yours. You know, my bubble's different.
That's what they say to dismiss, you know. And it's like, you know, it's like, well, it's this thing about
different bubble, you know,
the young have to always try to prove that they're so different and special, you know. But life is cyclical, you know, and none of us are really that different from our predecessors, our ancestors. You know, it's like it's in the psychology and the sociology of the species. So we can't, you know, we're not that special. We just gotta grow up and understand that we're you're gonna do what your father did, okay? And at some point, as you get older, you're really gonna realize just how much like your father and grandfather you are.
Yeah. You don't see the trends or the traits until you're like older and you start noticing 1 or 2 things, right?
Yeah, you're gonna walk past a mirror one day and look and go, damn. And it's like you're gonna see your fathers looking at you in the mirror. You're gonna go and look through mirror pictures and see your grandfather. So in Elliott wave theory, which is my technical bent, there's this thing called fractals, and it's like cycles. So it's like there's a bigger wave structure that lasts, let's say, like 100 years, and then even down to a wave structure that lasts 1 hour or 1 minute. It keeps repeating the same very similar structure. And so once you get taught it and you see it, it's like, wow, it blows your mind. And so when you realize, okay, wait a minute, people have known about this for, you know, over 100 years, and nobody told us this, and they're telling us that fundamental analysis is the only way, or it's the rational way, or it's the way the smart people do it, or most people do it, and all of those things are lies. And until you learn it, you won't know. It's a lie that only smart people, by inference, no smart people trade technical analysis. That's basically what they're saying. And so then when you ask them, do you know technical analysis? And they say, well, they don't say yes. And so like, so how can you evaluate something you don't know?
Now, when you're putting on or you have your technical analysis hat on and you're looking at the current market and you're hearing, you know, people talk about this is going to be a protracted or long bear market, you as a technical trader, no fundamentals included, or no fundamentals.
Yeah, I'm a purist. I only interact with fundamentals in the sense that there's certain major things like the interest rate trend cycle that's very important, and that and the U.S. dollar trend cycle, which is really the macro for that. That's the gas for the economic engine of the world. The trend state of the dollar and the interest rate cycle, period. The whole economy of the world runs on credit, borrowed money. Everybody all over the world is borrowing money to grow their business. And so you have a cycle where there's borrowing, and the interest rate should trend down during that cycle, because that's like a profit proposition, that you can borrow this money and put it to use in your business and make a profit and pay off that stupidly interest rate and make a profit. So that's your business. So that fuels the growth. And so that's the only way that you can say I come close to fundamentals. But for the people listening, the definition, the clear, no nonsense, straight up definition or distinction between fundamentals and technicals is technical analysis is what can be seen on a price chart. Period. Fundamental analysis is stuff the accountant would worry about and economists would worry about.
Now, like, I want to get into this though, but all right, cool. So we defined, hey, listen, this is fundamental analysis, or not fundamental analysis. This is pure technical analysis, and you're seeing what's going on with the chart. Complex design. Thank you for sharing the stream as well on the Black Brain Trust. I appreciate you here as well. Yeah, man. Had a good talk with our brothers earlier today as well.
You know where I've been hanging out, bro. I done told you now. Go ahead, bro.
So now we're looking at we're looking possibly down the barrel of a extended bear market, extended for a couple of years. Does the technical analysis, does the charts say that? Are we within that in terms of the different cycles or the trends? What do you say, Lionel, Dollar Will, Iori?
Okay. Can I give you a little long answer to a very short question? Just a little long, just a tad, not too long.
Well, I mean, yeah,
because there's many different schools of thought in technical analysis, and some are intended to be long range in their view, and others are not. And I'm from the Elliott wave theory camp, and not even all of us agree at this particular moment. I'm of the opinion that a down cycle is imminent, but I think at this moment today, and I reserve the right to change my opinion, say even a week or two or a month from now, because there's a certain price level where if the price goes below a certain level, that would invalidate my thesis. And so when people say, well, you said this last week and now you're saying this and you're all over the place, it's like, no, we're interpreting what the price is actually doing. And right. So there's certain moves that are out of bounds.
Essentially, you got to be adaptable and reassess.
Correct.
Yeah.
Correct. So there's a certain range of decline that the price is allowed to do. And if once it crosses a certain level, you'll hear all of us technical people get on one accord. But in these smaller moves, there's range for all sides to make an argument. But at a certain level, demarcation is going to cross a certain level or fall a certain degree where it'll rule out every bullish argument. And I'm of the opinion, and my opinion is, I'm going to say this, my opinion is aberrant even among Elliott wave theory people. So not only do people and the people in my group who know Elliott wave theory, they don't even necessarily agree with me, but I've been right before against the crowd, and I'm sticking to my guns, and I am right again. We'll see. So my particular opinion is we are likely to have one minor additional amount down to go, but not maybe like next week or something, not this week. And after that, I think we're going higher. I think we're going to eclipse the high from January. But we could get it's a minor trivial difference because we're likely to get to that point real fast, and then it's hell.
Now, okay, so
it's got to do with like wave count analysis and technical stuff, and I just have a different view at this point of price action.
So you're saying that this right here, we're close to the possible.
But the fear is warranted. The fear is warranted.
Like we're close to the possible bottom here. And with that being said, after that, we should be getting hikes to where we're getting all-time highs, even in the crypto market.
No. I'm sorry. Thank you. Let me be clear. I'm talking about everything I just said applies to the S&P and Dow only.
Okay.
Not crypto.
Okay.
I think that Bitcoin is going to hell. And hell is 10 or 11K. Something somewhere in there.
Thank you. I appreciate that because at one point I almost feared that my arousal of this current market and its downturn was not well placed. But thank you for I like it. I like it.
And I'm gonna let Lionel tell his part. It's about the crypto, but let me just say that's the my near term view. But I think we're gonna be likely to have a good next couple of days in Bitcoin. But towards the end of the week and maybe into next week, it's going to be rough. But now the Bitcoin issue has to do with the fact that the symbol first of all, it's cryptocurrency. Screw the word crypto. The most important word is currency, not crypto, currency.
Hold it right there. I want to read this from Alvin Hollinger III, our brother I'm Classic of the space. And I've talked to I'm Classic in so many different ways, and I should have sent him the stream link a long time ago. But he should have that in his WhatsApp now. Agree with $WIL. Technical styles are like martial arts styles. The personality of the practitioner determines which style fits shorter to long term. And then Richard Dixon, and then Unreasonable Man. I agree, especially with elections coming up. Alvin Hollinger again. An emerging market like this can be scalped if the trader is constantly watching charts or swing traded a longer term.
He's right about that. I totally agree with that.
And Alvin Hollinger again, just catching up with stuff here. Scalping is the shortest term. Day trading intermediate. Swing intermediate to long term.
Yeah.
All righty. WIL, you can finish up or go on. And Lionel, definitely want to hear from you, brother. I mean, I feel like you're just waiting,
Yeah, all I wanted to say was this, that the Bitcoin is crypto is the thing. I'm sorry, currency is the most important part, and the dollar has its own particular drama going on, which is the dollar is bullish right now. The dollar. The low in the dollar have, for all the bad talk people have about the dollar. This is how I know that there's people just talking and they don't know how to read a chart. The low in the dollar was like 2011 or something. Mm-hmm. But you would think the way people curse the dollar, like it's just falling off a cliff. No, the dollar is been like a decade high. And so people, I don't know, they're just talking. This is just barbershop talking. We need to get out of the barbershop talk and learn how things work. And so when the dollar rises, it stresses the hell out of other currencies in the world. And I know it's counterintuitive, but the dollar falling is great for us. The dollar rising is hell for you and the world. So all this talk about getting off the dollar and getting another default currency, it's because of this rise in the dollar in the last decade. Because when the dollar rises, it devalues the other currencies in the world. Mm-hmm. And so, but the typical trend state of the dollar is down. It's just that it's been falling down for so long, so hard that it's having a little recoil since a huge drop it made in 2000. from year 2000 to year 2009, it made a huge drop. And we're just trying to recover a little bit of that massive loss that the dollar had from 2000 to 2009. And so that strength in the dollar affects other currencies, including crypto. The dollar is the king of the world, period. And once you understand that, you learn what is affected when the dollar has strength, and you can kind of see the dominoes kind of set up. So when the dollar rises, the interest rate tends to, not immediately with it, but it tends to go up too, because the dollar gets to be in demand. And common sense dictates when something is in demand, you can charge more for it. So the interest rate is charging a higher premium because the dollar is in demand. And so back in 2017, when I first came on, I was telling everybody the interest rate's going to go up, y'all. Y'all better, lock in these mortgage rates, get a fixed rate, and pay this debt off and all. I was saying this back in 2017 because of Elliott Wave theory, because of looking at the trend state of the dollar, and said at some point the interest rate has to rise to capitalize. This is capitalism, to capitalize off of this demand that the world is going to have for the dollar. And sure enough, it kicked in. But that's all I wanted to say. I'm a chill.
Lionel, do you want to take it from here? I don't know if maybe Lionel's busy.
Yeah. Hello.
Yeah. All right. Yeah. Go ahead.
Yeah. So, like Dollar Will said, well, I agree with the Bitcoin analysis. Me personally, I have targets in the $13,000 to $10,000 range, but that's not the total destruction of Bitcoin. The macro. After that, I'll be looking forward to rise significantly in a bear market rally. But after the bear market rally is over, I'll be looking forward to go significantly down. And that's my analysis. I'm technical analysis / Elliott Wave theory. That's my
Lionel, can you get closer to the mic a little bit?
Can you all hear me?
Yeah, like you just sound a little bit farther away, or project your voice if you can, please.
Well, you know what? Let me get another microphone.
Yeah, and then when you come back, I do want to hear price points and dates on that a little bit if you have those.
But dates are hard. Dates are, we don't necessarily deal in dates per se because it's hard.
Yeah, no, I just like time frame. Like, are we expecting this in the next year, 3 months, 6 months, if possible?
I think that 10K definitely. If shit, we could see that by September.
Yeah.
Wow. Okay.
I mean, if you just look at at some point we could bring up a chart and show you how quickly things happen. Like these.
I'm actually working on that right now.
Good. If you bring one up, yeah. So you can see that we have a minor. Okay, if the top was 65K. And 50% of 65K is 32K. How long did it take to fall there? So if we're around, 20K now, and I'm saying 10K, it's not. It gets where it's going fast. It does not BS. And the fact that it falls like it does lets you know that there's a group think at work. That if you're not a technical trader, you do not understand it. You're not clued into the game. The game is set up to make you think and waste time talking these theoretical fundamental points, as opposed to looking at the technical analysis. Is like walking into a theater and everybody's running the hell out.
Right. Yeah.
And you go, wait a minute. Now, fundamental analysis would be, let me go in and see why they running out. Technical analysis is, I don't give a F why they running out. I'm running too.
Right.
I'm going to get out too.
So, I mean, when I look at these charts, like I was just looking at Ethereum a moment ago, and what I noticed with these charts, there's similarities in terms of the data. Yep. And it's just higher. The bumps are just higher, right? Like it's just a bigger bump. So when you look at this 2017 going into 2018, this drop, like I'm seeing almost the same pattern.
Yeah.
But it's just bigger, right? And then let's go over to that's I'm on CoinGecko.com. I'm looking at the max chart, and I just got it blown up here. So any thoughts, or where should I put my mouse pointer or anything like that? Yeah, let me know.
No, you hit it. I mean, just that basic observation you made right there. That's the main point, that people need to understand that there's a time and a season where this asset class, or I'm not going to think too hard on the word asset, but I'm just take it literally as this particular family of investments, this segment of the market. There's a time when it comes in fashion and out of fashion. It's just like in the stock world. Stocks belong to industries, and industries belong to sectors, and there's seasons or times when one sector and industry will fall in and out of favor, and technical analysis will show you how you can watch that money rotate from one family or asset class to another, and we go where the money goes, period. You will never exactly know why. You don't need to know why.
Now, Iori, your thoughts on this? I definitely want to include you in on the conversation.
Yeah, bro. I mean, to be perfectly honest with you, if you look on that chart, you can see 5 waves in it. So technically, we're really looking to see where this stops, right? And to be perfectly honest with you, I wouldn't say that 10K is out of question, right? Because technically this thing's really not doing anything. There's really not, think about it like this. There's not a recoil up from the bottom. Okay. That thing's staying like at that level, and probably is going to descend from that 19K, probably another 8-9K. We're probably looking at 10 or 11. That's right. That's where I'm looking. But to be perfectly honest with you, here's the thing. When it comes down to the timing thing, because somebody was talking about the timing piece.
Yeah, I mean,
we really don't worry about the timing piece more than we worry about the concept of targets. Okay. If our target is at 10 to 12K, we're worrying about those numbers coming closer to our target, not necessarily when it's going to happen, because we're checking all these asset classes as everything is happening.
Right. Yeah, it's another way of focusing, is what you're saying.
Yeah. Like for example, I look at S&P, I look at like all the FANG stocks, all that kind of stuff on the daily, and technically Bitcoin's everywhere. So like they're going to cover that. Like even if I don't look at it, all the guys that I follow who are technical guys cover it every day. So for us, it's not really a situation of when is it going to happen. It's how close are we to where we need to get to. We worry about it like that.
Well, I tell you a real basic technical thing that, like 101. You see on the uptrend, Grizzly, how you can point to the peak from the low, from the bottom of the screen on the left.
Mm-hmm.
And so you see it went to that peak there, then it went down, right?
Right, like that all time high.
Yeah.
We're either it's now the new low, and
right.
We're
right.
Like,
but what I'm
going to drop below that is what everybody else is saying. But go ahead.
The point I'm trying to make is there's another peak after that, higher than that, right?
Or close to it.
I mean, I'm talking about in the bigger view to the right. See that one? Yeah, and then you got one after that, right?
Uh-huh.
Okay, this is elementary, grade school. Uptrends make higher highs and higher lows. Now look at the downtrend. You got a peak going down, right? In the middle. There you go. Then you got, now looking at those smaller peaks of this from there going down is lower highs, right?
Mm-hmm.
Okay. The downtrend is over when it stops doing that.
Correct.
Okay. It's really that simple.
Correct, which is exactly what I was trying to say.
Yeah.
Remember, I was saying like, yo, you don't see that thing reversing, do you? Remember, I just said that. So
Yeah.
it's look, there's conviction in that price being there, and until that conviction switches, we don't try to force anything.
So when you say conviction, you're meaning like people want it to stay there, keep it there.
All right. Otherwise, it would reverse.
Yeah, until big money says, wait a minute, this price is too low, we got to start taking out some of these prior highs.
Correct.
Until it does that, if we were talking about women, we would say, you know, you don't want to be a captain saver, you know what. So why is it these same people turn around with their money in the stock market, they want to be captain saver, you know what? These are some whole stocks, man. Some whole cryptos. You know, and we're trying to be captain saver whole. We got to stop.
Some whole ass stocks. I love
some whole ass cryptos. That's what it is, man.
I'm back.
Okay.
What's happening?
All right.
Hold on. Let me get to this one comment from Alvin. If everybody calling 11K, what that means is it's a tentative bottom. That does not mean you don't buy small positions on the way down to get exposure.
Yeah, you can do that.
That's a way, but I would rather people learn technical analysis. There's no rush. What's happening, Judgezilla? Oh man, I'm cool. Judgezilla is in a different camp of technical analysis, but he's a technical trader. Man, I would love for him to get on here.
Yeah.
I'm not. I think he's a Wyckoff trader, and that's not like an enemy camp or anything. I like Wyckoff. It forces people. Anything that forces people to look at cycles, and be objective about what the price is actually doing. I'm a fan of it.
Correct.
I'm totally a fan of it. So yeah, I respect Wyckoff.
Judgezilla, you're definitely welcome to join, and also definitely want to hear from you. And what's it called? You're a bag holder, but are you also a bag? Are you adding to that bag? I'm a holder, or I'm a semi-holder. I'm going to be holding even more and adding to that bag, reclaiming some positions at a lower price, and then extending those positions as well myself personally. But yeah, let me know if you're going to add to that bag. And last thing, the whales come in with the liquidity or withdraw it, and then the retail traders follow. Okay, so yeah, pretty much, the sheep following shepherds, if you will.
Well, see, that's speaking of counter to what HODLers are doing. Think about put that last comment back up there again.
Yes, sir.
Okay, the whale, that's big money, folks. Okay, and it make no doubt about it. When we first started talking about crypto on the Black Brain Trust way back in 2018 or whenever that was, there were no real whales. The real whales were not there yet, and we said back then that they're coming. They're here now. Okay, right. The biggest, richest people in America are in crypto now. Okay.
Yeah, and that was like, you remember it was like every year the whales are coming, the whales are coming,
right.
The whales are coming. And then you started seeing it, especially with like people watching the whale alert Twitter feeds and stuff, and then people watching the chains themselves and seeing when a lot of money's moving, especially in the XRP. That was like a big thing.
So when you see a big candle on a chart, that's typically the whales made that.
Mm-hmm.
Okay, somebody sitting on a large amount of it said, sell it all now. And that's what caused that just cliff dive. They said, I want out and I want out now. Sell it all. So that volume of sales overwhelmed any bullish activity and caused that big red candle.
Yeah, we're kind of seeing that right there at the end. Right. And also really this one here.
Right.
So
the whales made that market go up, and the whales can make it go down. And if you're and whether you call yourself a trader or an investor, you're a loser if you're not whale watching. and you can watch it from the charts better than you can reading articles, okay? Because you can watch volume activity, and you can watch these big moves, and you can see and watch other asset classes. You can tell where the money left and where it is, okay? And if you're gonna stay in this game or keep your money for any length of time, so if you look on a chart and you look like span the decades, you will see huge shifts. Every like decade, something near like that, 7 to 10 years, something like that. The goal is to keep your money once you've made it and not give it back.
Exactly.
And hodling sets you up to give it right back.
Right. Can I get in on this?
Yes, go for it, man. I'm gonna take it.
All right. So can y'all hear me clearly?
Yes, he's much better.
Thank you. So, me, technical trader, my discipline is LA wave theory. Like I said, me personally, this is me. I'll only speak for myself. My targets for Bitcoin in the interim is between 13,750 and 10,750. I see that as a first wave down. Then we'll have a bear market rally. A nice bear market rally, but it's a sucker rally. And after that bear market rally, I see it going down even further. But that's my view of what I see on the charts. Now, the reason I'm saying that to back up my thesis, like Dollar Will said early in the program, he thinks the S&P and the Dow is going to make one more move up. I don't. I think the markets have peaked. S&P peaked January 3rd. The Dow peaked January 4th, and we are in this long, protracted bear market that's going to last a very long time. And even when it's over, the move back to all-time highs is going to last for the rest of our lives. Just to give a comparison, when the Depression started in 1929 and bottomed in 1932, it took the market 24 years to 1954, 22 or 24 years to get back to the all-time high of 1929. Per Elliott wave theory, we are 1 degree higher in the structure, which means the excuse me, which means this bear market is going to take longer, and it's going to be more severe than that uh, drop comparative to the Great Depression. So I think we are already in this bear market, and it started per the Dow and the S&P the beginning of this year in January. And I don't see in an environment where the market is going down, the economy is going down, you have higher interest rates, which makes it more expensive to borrow money. I don't see Bitcoin going up against that huge wave, against this a global economic tidal wave to the downside. I don't see Bitcoin going. I don't care what anyone says. Bitcoin was made for this. Bitcoin was made for that. You don't know that. That's you don't know that. Only thing you know was Bitcoin happened to be happened to come out during the 2008 financial crisis. No one speaks about the other iterations of a cryptocurrency before Bitcoin came out, which failed. It just came out during that time. So it wasn't necessarily made because it was made to keep us away from the Federal Reserve. Those are false rumors. I don't see Bitcoin or any other cryptocurrency. And Bitcoin drives the market. That's why you see a lot of other cryptocurrency or altcoins. Their charts look very similar to Bitcoin. Bitcoin is the dollar of the cryptocurrency market, and like Jolly Will said, the ticker is BTC USD. So I don't see Bitcoin going up to all-time highs and to the moon and 100K in a global economic tidal wave to the downside. I just don't see that, to be honest.
Yeah, and let me jump in here. Bitcoin is one of those is a luxury item in a lot of ways in terms of investing. It is not and again, you guys correct me in my lack of knowledge with this in terms of terms and thought processes. Bitcoin is a luxury item. It's like, okay, that's nice to have, but it is not your primary, and you're going to get rid of it as soon as shit goes downhill or down the drain. And that's kind of what you're seeing definitely in the market. People are getting, and sorry for the noise, the background noise, but people are getting rid of it just to make sure that they're covering their ass, their margins, and other things, or just to make sure that they have, you know, enough money to keep the lights on during this stagflationary period, these high gas prices and things like that, where the
But we don't
government
see
pretty
that.
much.
But we don't see that. The article just came out the other day from Cointelegraph that said 80,000 people who were crypto millionaires on paper, they're not cryptocurrency millionaires anymore because they held it for so long that they watched their portfolio dwindle from whatever it was when Bitcoin hit the all-time high of 69,000 to where it is now. Bitcoin is under $20,000. That's a $50,000 haircut. You may as well say Bitcoin all-time high was $70,000 because it was like 68, now 97. We can round it off to 70,000
Right.
because it dipped down to like $17,000. That's a $50,000 haircut. How low does Bitcoin have to go until you sensibly say, okay, this is too much for me to handle? Why would anyone hold on to a losing asset that made them a millionaire? They held on and made them a millionaire. Congratulations. But now that asset is, come on, more is 70%. At least 75% down, depending on if you held any other cryptocurrencies. Because we already know when Bitcoin goes down at 5%, all other altcoins go down at least 10%.
Yeah, I
So
mean, I had a portfolio that was overall across different asset classes at 100K, and then now I'm looking at that same portfolio. I've sold off, I've sold while it went down, and took some profits, paid some other stuff, and now I'm looking at portfolios like 34K, or at the height, Ethereum was like 45K for my portfolio, and now it's down to 14 to to say, hey, listen, this is what it was, and then this is what it is.
and the only reason the masses will hold on to, and I'm speaking about those people among the 80K who were millionaires on paper, and they're not, the only reason they will hold on to that is by listening to people on social media. When the crowd is saying one thing, okay, if everyone has bought and there's no more buyers, everyone who has bought has already bought, those buyers automatically become sellers. We can see it right now. The price of Bitcoin has been in this sideways movement for about 2 weeks since June 18th. The bulls had a chance per momentum on the charts, momentum oscillators. The bulls had a chance multiple times to push the price up, but they have not. They've just been stagnant. They don't have any more money. This is the bears are in control now. It'll get to a point where okay, it's low enough and people will come in and buy it back up. Who, we don't know. We don't care how much they put in. We don't know. We don't care. We're just looking at the charts and going by that. As Dollar Will said previously, we're not in the fundamental. Excuse me, we're not in the fundamental crowd. We're in the technical crowd because you'll see it on the charts before you hear it in the news. Classic example of that is Netflix. Netflix started falling in November. Netflix peaked at $799. Now Netflix is about $190. In April, news came out that Netflix lost subscribers, and people started saying, "Well, that's why Netflix went down." No, Netflix started when going down 6 months before that information came out. 6 months before you heard it on CNBC. So Netflix was already down 50% before you even heard any news of Netflix losing subscribers, and that only came out on an earnings call. So you mean to tell me you're going to sit through a 50% decline based on fundamental analysis? No, look at a chart.
Right.
Netflix charts looks like a waterfall. It's down. It's down even more than Bitcoin. So all this angst people have toward Bitcoin, and all these people talking about, oh, we told you not to invest in Bitcoin and cryptocurrency, is down 70 some odd percent. What about Netflix?
What
Netflix,
happens to the argument the pandemic is people gonna watch Netflix and Netflix gonna go up?
right?
That
Exactly.
all that false logic.
False
Right.
logic. PayPal, was it PayPal or Facebook? I think it was Facebook. That it had a gap so severe. The gap was maybe 10%. down to the downside. Now you're looking at stocks such as Apple, Amazon, Tesla. Tesla's already down 50%. Well, when are people going to sell Tesla? When the next earning call come out and they say, well, they can't produce this or they can't produce that, then they're going to sell. They already lost 50% of their income. They already lost 50% of their net worth, not income, 50% of their net worth.
And you know what? You're also seeing, I saw something, Elon Musk saying another thing about people working from home. That could be like a facade of sorts, but also an indicator of what's going on. You're telling people, hey, if you're working from home, you need to like stay there and not have a job. Well, could that be a reason or a way to cut his work staff, get
I
rid
would,
of developers from
I'll
some?
say I'll say like this: Elon Musk do not run the economy. I understand Elon Musk is like the Tony Starks, the reality, the real world Tony Starks. People like Elon Musk. They read his book, and let's be honest, people take investment advice from Elon Musk because when he was tweeting about Dogecoin, when he bought Twitter, people were buying into it. Elon Musk is that type of person that people will take advice, blind advice
Well,
from
he's a
him.
whale.
But we don't know that he's actually investing in the same things that
Exactly.
he's
Yeah.
talking about.
Yeah.
So now you're looking at a situation where the economy is going down. The Fed are just talking about raising rates, which we just mentioned is going to make it harder to it's going to make it more expensive, not harder, more expensive to borrow money. And the people that borrow money are not just individuals such as you and me, but businesses are borrowing money. Businesses are borrowing money to help run their factories, to help run their businesses. And now, if they can't borrow that cheap money anymore, it makes it more expensive. It's going to set a problem. So now you're looking at situations where, to save money, the first thing they're going to do is cut staff. Coinbase just said they're going to cut a third of their staff, and other companies are going to cut a third of their staff when not Netflix, but when Tesla cuts a significant portion of their staff, then you start to hear this take place and take hold.
Well, this is also anticipatory, right? Because it's all but announced, which we'll probably get more announcements of that throughout the weekend here. But Fed, sorry, not the Fed. What do the Atlanta GDP numbers say recession, right? So in anticipate, right, what are you going to get with recession? You're going to get lower consumer confidence, right? Lower consumer confidence means less people are out there that have their disposable income to be able to purchase what they need to purchase. When obviously we see fuel prices. This is all fundamental stuff, but it fits into what you're saying in the reducing of their company's overhead for the salaries put out for labor.
Right.
And I did want
or we could say the fundamentals give these people a narrative to do what they're already going to do anyway.
That's true too.
That's another thing. See, as a technical trader who used to be a fundamental guy, I get it, right? The thing I like to say is when people get into fundamentals, the reason that they get into fundamentals, or the reason they pay attention to fundamentals, is fundamentals attempts to give people who aren't technical traders a justification as a to B equals a C to D, or this equals that kind of situation. That's what fundamentals attempt to do. But the interesting thing is, by the time the fundamental information comes out, the technical situation has already played itself out.
Well, but the technical, based on, again, that's why you have the caveats in there when you use fundamental. When people do use fundamentals, right? Fundamentals are always rear view looking. They're always rear view looking. And again, what's the caveat that is given with anybody who uses any set of fundamentals or fundamental data over past, right? Say it with me, folks.
Sure.
Right? Past successes do not indicate future successes. Past performance does not indicate future performance.
It's data dependent.
Correct.
And by the time that data comes out to them, we already saw it on the chart once before.
Now, one thing I want to point out. This is something that Lionel said earlier about how Bitcoin has been trading sideways for quite a while, and I do have probably the last portion of that. I thought I had it up on screen when he was saying it, but I wasn't. I'm not being good here in terms of being a host. But you're pretty much seeing from April 2022, and then getting into May. Like you're seeing, like, as it goes down, it has those periods where it's being traded almost like for 30 days, it's being traded sideways.
Yep.
And then it just keeps going down no matter what.
And I'll say on the fundamentals tip, the fundamentals will have you going stir crazy because there's a difference between common sense and fundamental analysis. Case in point, on CNBC, I hear them say these two stats all the time. They say, well, consumers have saved money during the pandemic. They got the savings account, so they're out there spending money. But then on another show or later on, they say 65% of Americans don't have $500 in their bank account to pay for an expense. Which one is it? First, you say they got all this money, but the majority of America don't have money to take care of an expense.
Yeah, they don't give you the percentages. They don't tell you that it's certain people that have certain things where it's like there's only this many. I think it was only 50% of Americans actually invest or something like that.
Yeah.
And then, okay, that's cool.
If you take IRAs and stuff like that, man, try
or 401ks, you mean?
Yeah, or 401ks. Man, that number, 50% number, is very highly propped up by somebody just handing money over to somebody to say, here, do something with this, via their company. You know what I mean?
And I'll give you another example, piggyback on what you just said, Judge. Me and Mike spoke about this on the common sense argument, not the fundamental argument, but the common sense argument. The housing market, and especially some areas in America, South Florida is ridiculous. So the rent down there is I think the median rent is $2,800.
Yep.
But
even in my own area, my own old stomping ground, so to speak.
Yeah, it's expensive. The average is about 3,000 to 3,300, but the median income, I got some noise in the background. But the median income down there is about 2,500. So you automatically have to live with someone else. People are paying 67% of their income toward rent. So everything that's produced requires energy. We're not talking about the food. We're not talking about the gas. We're not talking about anything else that people have to spend money to either go to work. And a lot of these people, everybody's not staying home at work. People have to physically go to work. So now you're looking at a situation.
You're talking about what, $2,500 a month in terms of your monthly income, and then you're also looking down the barrel of $2,000 a month rent for a 750 square foot.
Less than 1,000 square feet.
Summertime, you're talking about a $300 electricity bill.
Right. So now that's an example. So on a common sense level, that's not sustainable. Now I've seen houses down there; they're selling for $350,000, and there's visible black mold in the bathroom. That's that. And you look at the price history, and they're clearly more than 50% of what they were selling for during the housing bubble. Some of the houses were selling for $78,000. Now they sell it for close to $400,000. That is unsustainable.
Now, we do have a chart up, and I definitely want to talk about it. Dollar Will suggested this chart, but I'm classic, man. I had to mute you. You had some background noise. If you're ready to talk, you can unmute yourself there.
Yeah, can you guys hear me?
Yes, sir.
Okay, man. I didn't want to take too much of your time up, but what did I want to say? These guys are on point. They definitely sound like seasoned technical traders. And the thing about not just this market, but just markets in general, is they're deceiving in a way that people who do not understand them or do not or don't really have interest in charts, whenever a bull market is going on, everybody feels like a genius until they're not. And so these guys are correct about cycles, but they're also correct about what they have seen and experienced in observing charts across several markets. These charts are a reflection of human behavior and human psychology.
Exactly.
That's why they keep on coming back over and over again.
Correct.
Now, the debates will always be, okay, what patterns best reflect human behavior? And then that's where you get into the conversation about which school or which style is the best. And they all have their strengths and weaknesses. I'm a neophyte. I'm new, but I understand the general concept. And I would say it really does help. It really cuts away the white noise. I find myself unsubscribing from a lot of crypto influencer channels, talking about what this corporation is doing or what these group of people are doing to bolster the value of the crypto. And I subscribe to maybe 3 or 4 core technical traders. And over time, I'm starting to see and I'm starting to pick up the language of what they're talking about with support, resistance. You know, there are different indicators. There are RSIs, or there are different time points, 200 moving day averages and things like that. But it takes time to do it. And really, these markets are really a reflection of you competing against yourself.
What made you take that step? First of all, congratulations to you, brother. What made you break away from the herd and say, "Wait a minute, let me listen to these technical people a little
to a fundamental AA meeting"? Like, congratulations!
Riding 2 cycles in the crypto market and realizing where I made mistakes after each one. The first one was. I got in before the bull cycle. So I rode the bull cycle, started to feel like a genius, started to do stupid stuff like putting bill money towards crypto because I thought in 2 weeks it was going to be more than what I had put into it until it wasn't. So I learned that lesson from that go round. Then I entered the what was
2017, 2018 when that started happening, the bill money thing, right?
Right.
Okay.
So the last recent cycle, my major revelation was when the bull was happening, I should have took more profits. I should have took more profits strategically, therefore locking them in. So now I'm on the 3rd cycle in which I am applying the technical analysis. And the more that you listen and you watch, especially when you watch non-correlated technical traders kind of come to the same conclusion. And it's not just in crypto, but it's also in stocks. It starts to become more objective.
And I like what he just said. Even though there are different studies in technical analysis, we all tend to get to the same destination. Now, I will admit there are some studies that allow you to see broader than others, but we typically get to the same destination. We just take a different route. And so there's no, oh, this is trash. No, we typically get to the same destination.
Well, you have to remember these different schools some of these schools are approaching like 100 years old, or maybe a little bit older than 100 years old. You don't successfully continue to create disciples or adherents if it doesn't work on a certain level, if it's not generating actual money. The candlestick charts, I believe, are from Japan, which are even older.
Yeah, and what's crazy is like experience and things like and the experience people have. Damn it, sorry. Like he's like my dog is just taking every squeaky toy and using it while we're on the stream. But
it has to.
Of course, it's the perfect time. But the experience seems like it breeds technical traders, right? People that start to look past the fundamentals and the FUD and everything else and says, hey, listen, I've seen this before, and the shit that they're talking ain't it.
Doesn't
And
make
then,
sense.
Right.
Well, because like Lionel said it earlier, right? Fundamentals will drive you insane.
Yes.
Right.
You will see an earnings call that is kissed from the heavens.
And it still go down.
yo, that's the story of my life for like 2 years.
And then the classic universal fallback, market manipulation.
That's right. Yeah. All right. I'm gonna get on my soapbox since you brought up like earnings calls, right? There was a stock called Dropbox I was in. You know,
now I remember Dropbox, and I wasn't in it stock wise, but I was a user, and I was a user and a computer consultant for a number of years, migrating people on and off of Dropbox. And you started to see, and it was like not irrational, but it was kind of amazing. Dropbox was the shit. Everybody had it, right? Kind of like Zoom now, and then or even Slack. But then Microsoft came in,
Slack,
and started swinging that fucking sword called, "Hey, we have a platform, Azure, all this other stuff." Now everybody's OneDrive, and it's all integrated, and you've got Teams and all this other stuff.
Right.
And they just built like a whole ecosystem. So you got Slack or Slackers, and that whole technology slacked off to the point where now they want to sue Microsoft, saying things like, well, you guys are taking, you're being unfair, you're too good, and all this other shit. So when you say Dropbox, I'm like, wow, people still use that?
Well, here's the thing, right? Dropbox went public.
Get a little bit closer. You sound a little bit muffled.
Sure.
Okay.
Can you hear me now? It should be better, right?
I'll just be quiet, but go ahead.
Yeah, so Dropbox went public, I think in 2017 or something like that. I don't necessarily know, but I got in after it went public, got in at $25. I was like, oh man, I'm a tech dude, this, that, and the other, do a little technical analysis here and there. This is before I went completely chart-based, like in the sense I don't care about fundamentals anymore. Anyway, this thing would have the best earnings on the market. Okay, EPS was supposed to be 13 cents. It showed up with 15 cents. Subscribers were supposed to be 15 million. It showed up with 15.5 million. Like all the metrics, just hit it every time. And I'd be holding on. It would get to 24. It would go back down to 22. But the thing is, all these TV people, air quotes, would say, oh man, this is a gangbusters quarter, man. They did a great job. Great job. And I'm sitting here, I'm like, oh man, this is finally sometime that I can actually make some money on it, man. I'm actually counting my money before it actually got there, right? Next day, down 17%. The counter articles come in. Oh, Dropbox had a great quarter, but some of the analysts said that they really didn't do what they were supposed to do, or something like that. There'd always be like a counter article the next day. But then it's funny because if you look at how these analysts kind of do their papers, right? There'll be one analyst saying, okay, like, I don't like it, and because I don't like it, it's going to go down. 48 hours later, there'll be another analyst that says, consensus buy rating, we see something positive for the future.
Hey, don't hate on the Motley Fool like that.
Oh, well.
And it looks like they IPO'd maybe around 2018.
Yeah. I was in that thing for 8 months. So I can go ahead and talk all the shit I want to talk about.
But you know, it's crazy though. Like when you get these new IPOs, these new SPACs, what have you, you know, we of course in the cryptocurrency market we see this all the time, where it's that like major pump when the coin first comes out, and then of course that what's it called, the dump after the fact. I wanted to say preceding, but or proceeding. I don't know.
But you know, with the SPACs, you're exactly on that. And again, as attributable to Lionel, I'm in agreement with. I'm not going to say Lionel's right. What I'm going to say is I'm in agreement with Lionel. I'm in agreement. We share the same mind on this, at least. So we could both be wrong, but we share the same mind. Right. You don't have the interest in the SPACs without the loose liquidity of the last 2 years. You don't have that interest in them. SPACs had existed well before the loose liquidity.
Yeah, you know, it's funny because even my cousin, a cousin of mine, he started a WhatsApp group and talks about trading. Iron Classic is in there with myself and some of my cousin's close friends. And he's a Chamath hater. I call him a Cha hater. And he's talking about how Chamath Palihapitiya, and how like a lot. My cousin says, well, you know, he lost a lot of people money because he put out these SPACs, and then these SPACs started to go bankrupt and you know, went down in valuation and things like that. And I'm like, okay, I mean, I haven't heard that, but that just shows my disconnection from what's going on. You guys your thoughts on that?
Go ahead.
Go ahead. Well, I'll just say this real quick. Much to what you both said, and I'm in agreement with, right? Bitcoin, the coins and everything, those were luxury speculative items. So that's what SPACs became again, because when you had that loose liquidity, you also had a whole bunch of stock buybacks, because the majority of that loosened purse that created liquidity, right? That poof liquidity came in. It didn't go to labor pools and labor markets. It went to companies, big companies, financial institutions, and stock buybacks, where we're going to put it, speculative activities that are going to that we're going to be able to utilize this money at top dollar, at full value, get in early, drive the direction, sell when we want, and leave the people holding the bag.
Correct.
I mean, for that situation, bringing in those SPACs and bringing in those situations for those, it's just a purely speculative market with nothing behind it. Now, if you're looking at speculative markets like that, and you're also trying to fathom in fundamentals, like, you know, like EBITDAs, like earnings calls, like any of these other things that you would traditionally utilize for valuations, while you're already looking at valuations for companies that are their valuations are super inflated to 15, 20, 30 times earnings, and some billion-dollar valuations for companies that have zero revenues, you're going to drive yourself insane. Do I sound like a person who's recently recovered from being insane?
Yes, you do.
Yes.
I think you're gonna have to resupply on that medication pretty soon, bro. Down to your last pill, it seems.
I'm going to add to this real quick about the fundamental thing, right? If you're an active guy who looks at your portfolio of stocks, there's a reason they tell you to hold and forget. Because if you really understand, like the concept that I was talking about with the earnings calls and all this other kind of stuff, you really can't get a decent amount of money. Like, I'm talking explosive, 20, 30, 40, 50%. You can't get that from fundamentals. Because the thing is, I'm telling you, I tried it, bro. It doesn't work. Like, if you're gonna go straight on fundamentals and articles and all this other shit, like, it's not gonna work. I've seen people start out with like $100,000, $200,000 in their investing account. go completely fundamental and basically be flat to negative 80% of the time following fundamentals. There's a reason that they tell you, hey man, just buy it and forget about it. Buy it and forget about it. So
They would have been better off in ETFs or index funds.
Right.
yeah, they would have.
And to
They would have.
piggyback on the easy money part, we've been in declining interest rates for 40 years, I believe, about around 40 years.
Yep.
So,
Yeah.
right, until recently. And we didn't, in America at least, we didn't go zero negative. We went to zero. And there's a chart, anyone can look it up. I have it on TradingView, the United States mortgage rate. And in December of 2020, it was about 2.9%. So that's easy money. Basically you're gonna, if you have a good credit, that is, you can pay that percentage on a mortgage. But also people, not the businesses, according to the interest rates in America, businesses were also borrowing money at a cheaper rate. But now you have a situation because all that free money is in the system. Prices of things going up. You have gasoline going up. And gasoline futures are out of this world. It's ridiculous. Oil has went from negative $47 to $127 a barrel. That's ridiculous. I remember back in
Next,
2008.
that's definitely going to be the next bag holder situation. I guarantee it.
Exactly.
I guarantee it in the span of 30. I'll say in the span of 30, no more than 60 days. I guarantee it. Bag holder situation is all day set on that.
I remember back in 2008 when malls were shutting down because it didn't cost. It was more effective for them to shut down because it cost too much to open the malls. So now
Yep.
we got a situation where the mortgage rate within about 2 years is now 5.84%. This thing can get up to 6 to 7%. That costs money for people to borrow a mortgage. And in an environment where housing prices are inflated, that's a situation where more and more people are not going to get a mortgage because it's too much to get a mortgage to pay for these high inflated prices. That's going to change the landscape in the real estate market. With the interest rate went from zero, almost zero, to where it is now, and we already see cracks in the system because we've been so addicted to quantitative easing since 2008 or so,
Yep.
to cheap interest rates, meaning it did not cost a lot of money to borrow money. It was cheap money in the system, and we got so addicted to that, like crack. Any type of weaning that goes any type of, when the Federal Reserve try to wean us off of it, you see this reaction where, oh, everything's just falling, everything been falling. That just goes more into the technical analysis standpoint. We see it on the map, we see it on a chart before they even tell us about it. And gasoline futures, this thing went in 2020, March 2020,
Yeah.
went from 37 cent to its peak last month, not even 2 weeks ago, to $4.32, and it reached the all-time high. It made a higher high. Now we could see a higher low and another higher high in gasoline futures. What is that going to do with everyday the everyday person who has to commute to work, and if their commute to work is long? What is
Yep.
what that that's this entire thing is
Or
unsustainable.
you're not even talking. Look, okay, so we're not even talking about that. Not even just that. Not just to commute to work. What if your job? What if your work is transportation?
Mm.
Yeah.
Right? What if your work? What if your business
Uber.
is transportation, i.e., courier, i.e., rideshare, i.e., last minute,
Rideshare, Uber Eats.
last mile services, trucking industry, like moving industry.
Yeah, I mean, especially things like Uber Eats, and like, people are already complaining about, like, you're spending damn near as much in terms of service fees and everything for your meal,
It's
and
meal
then
costs.
tip as well. Say that
You're,
again.
you're spending much on you're spending more. either you're spending more or close to the amount the meal costs to get your food.
Yep.
Yes.
And it's crazy. And that's before the driver even gets tipped.
And so, right, how long before, right? So what Lionel's saying with the housing market, right, he's talking about smart people, right? Smart people who play my favorite game called Calculator. And they say, 4% at 4% in a 30-year mortgage, right? You know, we'll say halfway smart people, they still get the 30-year mortgage, but they get it at 4% or 5% or whatever. You know what I mean? Like, and then they play the game of Calculator and say, I'm going to end up paying $80,000 more.
Yeah, for this. Yeah, I have like an amortization.
Tell me this, fellas. Can you
same thing with the Uber? I'm just saying with the Uber Eats, you know, until people start smartening up and saying, man, it's just not worth me using this service,
right?
Because it's so much cheaper for me just to call in my order and go grab it myself.
Yeah, or use the app. Dollar Will, I've been wanting to get back to you as well. Let me read this from Stan Shelton. Right, they're going to intentionally crash the housing market. People have to have somewhere to stay, and you know, like whether they are or not, like as you said, like you know, no matter what, they have to stay. So they're going to pay that price, whether it's the 4% or even more than that, 6 or 7%, or you know, like a 5%, I should say, because it won't. 6 or 7. Not saying that it won't get to that, but it's just like 6 or 7% is crazy.
No, I'm saying it will get to that. You may not want to say it, but I'm looking at the chart right now. I'm saying
you're too young to remember the interest. Like I'm 45.
Yeah, I don't know. My interest rate on my home is like 2.9%, 2.99, and I protect that with my motherfucking life.
Hey, there was a reason. There was a reason why for your entire life you probably almost. I don't think, unless you had a study on it, I don't think you ever heard the term adjustable rate mortgage. Did you?
Or the ARM?
Oh yeah, ARM. You know, I heard it, and you know, the 2008, and it affected my family.
Okay, 2008. Yeah. For that. But yeah, that's why you haven't heard it since then. Is because it was so cheap, right? But the crux on that, you know, but the hammer on that, right? No, man, Reagan. And the Reagan, you don't know what the inflation rates were like in Reagan's, you know, like at the Reagan and Bush one terms.
Yeah. In '94, I was so proud to have gotten a mortgage rate of 6.75.
Yeah, I remember what's it called? BGS talking about like double-digit interest rates on like vehicle loans and shit.
Yes.
And so even Dollar Will, go ahead and take the floor with the chart that I have up, and then
I want you to switch in the link I gave. I put yet another one that's better than that. It's called a better chart. It's to go to the bottom. But so the person that made the comment about the housing situation, this is another benefit of gray hair. I'm 58 years old. Okay, and so what had happened was back then. The foreclosure rate went up so high, especially in Prince George's County, Maryland, okay, where the black wealth is, especially there, okay. It was one of the leading places. In Miami was one, Orange County, LA was another, and Prince George's County was like right up in that top 5 hardest hit. So when you go in foreclosure, you could take a year before you even get to court. So you're not going to get thrown out immediately. That's the good news. Also, the state doesn't want you showing up. They don't want a tsunami of people showing up for welfare. So they'll fight to, they really don't want to put you out because you know that you got to go somewhere. And there's an issue of public unrest. They don't want people to riot. So in a big crisis like that, the banks really get stiffed. Because the people, you know, it's really, they're not in a big hurry to put people out. Yes, some people get put out, but it's not like immediately, and it takes a real long time. So you really do have time to figure something out about, you know, whose couch you're going to sleep on and all of that. But this chart right here, the red lines show a very common pattern called a symmetrical triangle. And we know about triangles. They got a pointy end, and what the pointy end means with respect to price is the thing about symmetrical triangles, it doesn't really say which way the price is going to go, but when you get closer to the pointy end, the price is getting ready to go. But so there are other things you can do. We look at different time frames and other processes we go through to determine what's the most probable direction out of that triangle, either up or down. But when you get to the pointy end of the triangle, that's like compressed energy. Before prices make a big spike, it's common for the price to compress like that. So the bulls and bears are fighting it out, and they're agreeing on within a very small range. So that's one of the techniques you look for in technical analysis, a long consolidation, and especially if you see like a narrowing range where the candles, this is a line chart, but if it was a candle chart where the candles get smaller, because that's a precursor to a huge move coming. And this broke up. Now, can you touch the 2022 part of that chart? That dip, go touch. Just touch it.
It comes through as an image for me.
Yeah, still, you just rise. You see where it says 2022? Look at the bottom.
At the bottom.
Down the bottom. Right. Now go up to that low right above that. To the left of that a little bit. To the left of it. Okay. So we all know that Bitcoin was in hell in all of 2022. When we say cryptocurrency, everybody's brain thinks Bitcoin.
And just to clarify for everybody, this is a USDC slash USD chart. Go ahead.
That's exactly what I'm getting on.
Oh, sorry about that.
This is a cryptocurrency too.
Right.
Now, I want everybody to know that, now the title of this show, maybe should have did this in the beginning. It's a little bit of clickbaity. I do that too on my channel. I like to poke the bear and start fights with hodlers and people who ignore technical analysis.
Oh, you came out swinging on the fundamental traders. I felt I was getting slapped in the face.
Yeah, I'm coming out because I have to fight with folks to wrestle them to the ground to make them get off of the stupid stuff. Because you can't be polite about this because
it's like WIL's the type of motherfucker that's like, look at it.
Yeah. It's like so but I'm coming from a good place. It's all love, y'all. I just know how stubborn we are, and we won't shut up when we don't know what we're talking about. So I had to come in and wrestle us to the ground. But I was even on a panel within several panels in the last 2 weeks with somebody who's a Bitcoin blockchain programmer was saying, why you keep talking about the dollar? The dollar has nothing to do with it. I'm like, wow.
That is insane.
Right. Oh my God.
Your currency has no value without the dollar.
Right.
Where do you get any value from it?
And the fact that a panel full of people can listen to that and me and that person can argue and they not know which is who's it's frightening. So it's like, yes, I got to keep picking fights because we got to get shaken out of this. So you had every opportunity to go long this particular cryptocurrency. I am not against crypto. I am pro knowledge of trading, okay? Because this was a good crypto trade. But if you have to know the significance of the US dollar to know that if that money or weakness in Bitcoin or the other cryptocurrencies is going to generally accrue to strength in the US dollar, you could have gone into your account, and because you know how to read the charts, you could have looked at Bitcoin USD, and then you could have looked at USDC/USD, which is basically the digital version of the US dollar. You can think of it that way, okay? Yeah. And so you look at it and you go, Bitcoin's looking a little top heavy, and the dollar is in this symmetrical triangle. The Bitcoin, now if the dollar goes down, that would mean typically that the Bitcoin would go higher. But since the Bitcoin is already looking like it needs to fall, then that would mean conversely that the dollar is likely to go up. Okay. And so you could have in 2022 ran to the USDC quote unquote stable coin. I hate that term stable, because stable does not mean that it won't fall. They really need to not call any of these coins stable.
Yeah, it's market.
Because people think stability means safe.
Well, yeah, but
So,
I mean,
because of the way,
but you got to have a kind of
think,
understanding of forex markets to understand
yeah, but you
what
can't,
relative stability is.
I hear you, but see that's the word, that relative ain't mentioned.
Let me interject here. One of the things in terms of going back to you know, the fight, the back and forth that you had with the guy talking about, you know, the USD doesn't mean anything. A lot of people, you know, in the space, in the cryptocurrency space, always want to talk in sats and stuff like that. And it's like, okay, this is valid, but it's still not valid to the what's it called, the masses. So I can't look at it as Satoshis or in Satoshis or fractions of a Bitcoin. Like that doesn't mean anything. That holds no weight. That's like you saying it in pesos. It's just like, I don't fucking understand that. You have to say it in dollars. But then you also have to look at that same person. I would assume that they were probably in the US and they're saying USD doesn't matter. And it's just like, well, how do you buy the coin? Like, what currency do you buy it in? Because then it does matter. And that's like, that's the first thing that hit me. But I didn't take offense to it because I know some of these people like to talk in Satoshis. And I remember, I think it was the Martini guy, popular YouTuber, got even more popular over time for calling people out on their bullshit. But in terms of the cryptocurrency market or influencers, but he used to try and say sats and all this other shit. And I'm like, you know, nobody understands that because he always had to say it in USD or, and he's over in like the UK. But he would always have to say it in USD for people to really understand what the fuck he's talking about or understand the gravity of it. But go ahead, guys. Sorry.
Yeah, I'm saying don't fall in love with none of this stuff. I'm not a fan of no company, no stock, no crypto. I'm only a fan of the chart opportunity, the chart setup that allows me to make money. That's all I care about. And that's all your boss cares about you. This is capitalism. This is about exploitation. And we have to become the exploiter and not the exploited. So don't let nobody make you feel like you a trader or you're disloyal because you're not hodling. No, this is a trade. It's all a trade. And don't get tripped up by people saying, well, I'm a long-term investor. That's bullshit. You're a trader. Everybody's a trader. There is no such thing as a long-term investor. That we say that damn word when to justify that we made a dumb decision. That's what that is. Everybody buying a stock, crypto, or whatever is doing so to make money. And if you can make it in a day, an hour, a year, a decade, it doesn't matter. All of those different time frames, just how long you held it. But you should not justify a losing trade by telling yourself, well, it's an investment. No, get off of that crap. Accept that you made a mistake. Learn what you should have done instead. What thought process you should have had. What rules? How do traders look at this? Learn to be a trader. Okay, put in that time. Hang out around traders and learn how we spot these opportunities. And then you can hodl with the trend going up. And so you're only going to hodl. Let's say if you're looking at a monthly chart or a weekly chart, those trends last a long time. You can hodl within the frame of that uptrend. Learn something like Elliott wave theory and Wyckoff. They'll give you some parameters of understanding when that trend is running out of gas, so you'll know when you need to leave the party.
Correct.
Hey, Mike, I got I'm sharing my screen. Put me on.
Right. You're up.
All right, so this is the U.S. mortgage, and this thing been falling since at least 1990.
Yeah.
It made a bottom in 2020.
Yep.
It's typical. When it's saying fall, it makes a 50% retrace. You see it right here. You see it right here. You see it right here. This thing has broke out a 30-year channel, such as this. Broke out a 30-year channel. So we can see this thing 50% retrace and hit this area right here back in 2006 at 7%, 6.87%. You Mike said you had your mortgage at 2.99. I could tell you looking at this chart when you bought it. You bought it right up in here. Those when
Yeah, I bought it. I got the house closed on October 31st. Or yeah, October 31st. No, yeah, something like that, and moved in November 2nd.
of what 2020, 2021?
2020. Sorry, 2020.
Yeah, and it was right up in here. So,
Yeah.
but since then, this thing has risen. This mortgage rate has doubled, and it can hit 7% before it retraces.
Do you see that 1991 11%?
Yeah, right. This was up 10%. I mean, in the 90s, and then that's the
Yeah, we're 6.75. That's me.
right here. So this is the U.S. mortgage rate. This is gasoline.
Oof.
This is gasoline. This low right here is in 2020. This thing has been on a rip roaring
And I feel
tear.
like an idiot. I didn't get none of that. I feel like the dumbest trader in all of America, listening to folks talking about crypto and being distracted, and people saying nothing went up like crypto. Bullshit.
Yeah.
This thing has gone up significantly. Now the thing about this is gasoline futures. This thing has made a higher high relative to its 2008 peak. Let's look at oil on a monthly time frame. Oil.
And also, I do want to point out one thing. Lionel is one of the star pupil, if not the star pupil. Iori, please don't be offended.
Oh, no worries, bro. No.
Is one of the star.
Lionel's a peer now. He's the graduate.
He
fights with me too damn much to be.
I only debate my equals, and he's become that.
He's a peer.
Yeah. So Lionel, I want to let you guys know the value of WIL and his Patreon and the group of men that surround him and fund him and support him. But you have somebody like Lionel who's breaking this down and looking at these things from different aspects and perspectives. So one, shout out to, of course, Lionel and his growth in this. And then it also, of course, to WIL, his teacher. So I wanted to point that out to you guys. But go ahead.
Oil's 2008 peak has yet to be eclipsed. This was when malls were deciding to shut down because it was too expensive to open up. This was 2008. This is the gasoline 2008. The worrying thing is gasoline eclipsed its all-time high. Oil has not. And me and WIL talked about this. Could oil eclipse its all-time high? Right. Now, on the oscillators, momentum oscillators, we're
Exxon made its new high.
Right. So now you got oil companies making all-time highs. Now on the oscillators, we are deeply overbought, so we could make a retracement, but this is a higher high in oil on a monthly chart that spans decades. We could see a higher low and go up. So those high gas prices of the gas tanks may not be going anywhere. So now we got gas that eclipsed its 2008 all-time high. Now we're looking at oil. These charts look similar on a monthly. It's just oil have not peaked its 2008 all-time high. Now we get at a situation, is oil going to make a retracement and then break its all-time high? And we could have a situation where oil is it's like $150 a barrel and gasoline is $6, $7, $8 a gallon.
So I only and I know we just got through beating up fundamentals. But again, part of this is current circumstances, right? International circumstances. We have to take we can't. I don't think we can completely eliminate that.
I want to be clear when I'm beating up fundamentals. I'm saying I'm doing that. Yes, to be provocative, because people try to trade fundamental logic. Yes. You can't. That's what really I'm arguing. I'm not saying dismissing fundamentals. I'm saying don't think that fundamentals trump technicals. They don't. Okay.
No.
Now I can meet you halfway and say they're both important, but if you back me in the corner, I'm gonna tell you
Technicals all day.
that you can get by with no fundamentals, and you absolutely will end up on the correct side. Not absolutely, but you're more likely to be on the correct side of the trade if you trade exclusively technicals than you are if you trade exclusively fundamentals. And
because more of the market is dictated by algos than anything, and that's going to be by logic, and that's going to be behavior, and that's going to be behavioral pattern.
Also, because no matter what people think, no matter what's driving them, it's whether it's fundamentals or technicals, we all have one thing in common. We all arrive at a computer and we press buy or sell.
Right.
Once they do that, gotcha, because your data shows up on a chart that I'm looking at. So everything comes home to the technical trader, and we get to weigh and measure it right there. So it doesn't matter.
I wasn't saying that you were doing that unjustifiably. I was just doing it as a preface to place what I'm going to say in here. Now, with that situation in that region that's over there, that's happening right now, because I don't know how sensitive YouTube is right now. About that,
I'm too small to really. It's not a big deal.
And so I believe that part of the concessions will be a pipeline concession. So what we're looking at with gas right now and what it's done versus what oil's done, and given that the season for oil is obviously winterized season, right? Then with what adjustments have been made since the beginning in production, are we going to look at, if you go back to the oil chart?
Yeah, I can do that right now.
That infamous day there, if you pull that Sir Henry, you know which one I'm talking about, right?
The negative.
Yes.
Yeah. That's right.
That situation being that it's going to free up that concession in that situation is going to free up the commodity, and it's going to express a glut. Is that a consideration?
I'm gonna let Dollar answer that one.
What do you mean when you say consideration? You mean when you say consideration, I hear that as, will that guide my decision to be long or short, bullish or bearish? Is that what you mean by consideration?
Specifically for crude oil.
Is that your question? Would that dictate my decision? No, I would go strictly by the chart, because we have different camps of technical analysis. The problem with Elliott wave theory is that it is the hardest to learn. And so that's why a lot of people don't learn that one. But I think because I've spent a little time in most of these different camps, it is the most robust. So we have a lot of different indicators that the market, if you've been in a lot of different, if you do volume analysis like y'all do in Wyckoff, and you doing candlestick theory, Elliott wave theory, patterns, recognition, all that stuff together, you can see deceleration of the trend. And we have certain levels that we project using Elliott wave theory about where the price should go. And so when the price gets to that area, if it starts to look suspiciously weak at an area where we projected it should be weak, then we go, wait a minute, okay, it's rolling over. So then you get the candles making lower lows. It's a list of things that start to happen. And as these technical dominoes start to fall, we know well before that, when it falls, we're not like shocked, like, it fell today. We're like, okay, well, damn, when is it gonna fall? And
I'll add to that. There's another part to Elliott wave theory called socionomics, where certain things in the society tends to happen during certain wave structures. To give an example, when the dot-com bubble fell or popped, there were things going on during the dot-com bubble that are going on during this bubble, but on Elliott wave theory, it was the same wave, different degrees. So case in point, during the dot-com bubble, you had athletes giving investment advice. You had taxi drivers giving investment advice, and
Right.
you had um, different things happen. So per socionomics, which is another part of Elliott theory, they talks about what during different cycles, the what's the word I'm looking for here? The mood changes, and when the mood changes in these exuberant uh, market peaks, you tend to get these certain activities going on in the world. But during the bottom, that's when wars start. During either to the bottom, at the bottom, or on a wave up, that's when wars start. That's when over dictators get overthrown. So that's another part of social numbers. So to answer your
Hmm.
question, what's going on over there is it falls right into the wave structure.
Yeah, so it's like I would say also I ditto everything that Lionel said. You know, that's how more like Robert Prechter, his particular like social economics. It's like the intersection of sociology and economics, and so it's basically man responding to the environment, and it challenges you to see it the opposite of way of the flipped
Mm.
way of
The
the flip
fundamentals.
way than fundamental folks look at it. Fundamental folks see price action as the result of fundamentals.
You
And
gentlemen,
I'm saying
let me stop you right there.
what I'm asking people, I'm going to finish one thing. What I'm asking you to consider that the policy, what you call fundamental analysis, Fed rate policy, all that, and war and all that stuff, it's a reaction to the price.
Look, you guys are so generous to me. Thank you so much. You guys have been so generous and kind to me because what you could have just told me right now is what I just realized when I was going to stop you right there, Dollar Well. Hey, look at the goddamn chart.
Right,
Right.
right. This
It's
price
a
right here,
monthly chart. It's a monthly
yeah,
chart.
yeah.
So take this thing down. Take this thing back to January when they started talking about the situation over there in February, and look at the damn chart.
Oil was
Um,
already $100 a barrel.
Thank you.
Right,
Thank
you're
you.
It
gonna
was
have
already
some
100.
conflict in the world when the resource in this industrial age that we all gotta have to run these factories and keep the machine going. You're gonna have some stress, okay?
so
Right.
that's
And
the
You
way of
guys were
saying
so
that
kind to me on that one, and it just slapped me. I slapped myself across the face when I'm like, it's a monthly chart. It's a live chart.
Now,
Look
right.
at the
now
chart.
think of
Now,
that. Think of that the next time
Correct,
somebody
Judge.
tells you
You
that
got
the
it.
price went up because Elon Musk made a tweet, or because somebody's earnings came out positive. It is so
Oh,
fucking insulting. And we got like, what did PT Barnum say? Sucker born every
sucker
minute.
born
We
every
got a
minute. Yes.
nation of people who just buy bullshit. It's
Oh,
we are in
I
trouble.
now,
look. I
like,
again. I'm a recovering. I'm a recovering fundamental addict, and sometimes I throw myself in, and I gotta slap myself just like there, just like right there, and like, look at the chart.
now,
and
with that being said, though, like in terms of the chart, are you kind of saying that the chart could have predicted the war, or the
no,
war?
what I'm saying is the what's going on in the society is a result of the price action, not the other way around. People fundamental
Wow.
will say the price is going down because there's a war. No, we're saying is the war is going on because of the price, or wars
And
start
not
because
just
of
oil,
price,
but the
or
dollar as well going up.
right. And
Both.
let's say gas goes, let's say gas goes down, makes a higher low, and keeps going up significantly up to, let's say, $9 a gallon, $8 a gallon. Well, that's safe to say you're going to have some type of protest, or some type of I'm going to have some type of protest. But the CNBC, MSNBC, blah blah blah, they're saying gas is going down because whatever, and we're saying hold on, not so fast. It's only going down the interim. It's going to go back up. And because we know that, we can look at the chart. We can in Elliott wave theory, we know that, okay, when it goes back up to these extravagant highs, we're going to have some problems. But we know that sitting here now, if it goes up, we know that sitting here now, a year or so in the past. So now we can position ourselves and say, okay, what can we do to make sure that we're safe in the event that this thing goes up to these high prices and something jumps off? You know, that's what we're saying.
If you look at that high that we had in 2008, and you can see that it trended down. It trended down from 2008 to 2020. So that was 12 years of a reprieve for us to purge ourselves psychologically and heal and repair from that trauma. So, you know, a whole lot of people died, new people became adults, and they don't have no institutional memory of that. So that's the good news, is that when we start falling, it could trend down for a long time, and we could have, you know, prosperity in the middle of there somewhere. So, you know, so yeah, price, this is
And my thing,
cycles.
This looks like a clear 5-wave count. 1, 2, 3, 4, 5. A clear with an extended 5th wave. This is like a clear 5-wave count. And because I know we're gonna have a wave 2, and then a possibly wave 3, and wave 3 goes a very long distance in price in a short amount of time, and we could feel some severe pain. Now, this is the futures market. I can tell you, okay, you want to eat that big, nice, juicy steak? Okay, live cattle. Let's go to the live cattle futures. I can tell you, okay, this looking at this, it may become cheaper in the future. We can look at, and this is for anybody that's listening, rice. No, it's gasoline, but we can look at rice futures. We can look at any type of future, sugar, and say, well, you know, it's going to be cheaper. Like, this is technical analysis. We can say, well, okay, that them eggs, that bread, this soybean is going to be either cheaper or more expensive in the future. This
not exactly, but what probability dictates?
Probability dictates.
Right.
That's a nice ABC, man. Look at that.
Yeah.
And consider how might a trucker, you tell me, I want to hear somebody make an argument. How can a trucker afford not to know technical analysis? They out here spending several $100,000 for trucks and don't know how to read a price chart. Now, you can't tell me their decisions wouldn't have been different if they had some insight into technical analysis and they saw oil or energy spiking like that, and they knew how to project it according to Elliott wave theory about where it could go. That would have put some pause in their game about if this was the time to buy that fleet.
Yeah.
They can't afford not to know this.
And the time to buy that fleet was down here in 2020 because the gas is so cheap.
There's a brother in the manosphere. He was in the Black Brain Trust, and he was in the Patreon group. And he's a trucker now. I don't want to put his name out there, but when he was going into trucking, I said to him, I know people in YouTube are talking about being owner operators. I'm not a trucker. I don't know nothing about that, but I can tell you from this chart perspective, working for that company and letting them own the damn truck might not be a bad idea.
Right.
I told him that.
Yes.
I said, let them carry the risk. You get your money, your check, and you go home and leave them with the equipment.
Yeah.
That's right.
Let them deal with getting the contracts. Let them deal at that. For looking, I can see what you're looking at the future. I'm not a big futures guy. You already knows that. I'm not well versed in it. But I looking at that chart, I could definitely see that was definitely viable and valuable information at that point.
I just read something how companies are having.
We've talked about that in privately about the fundamental things. So
no, but I like Wyckoff, man. I was glad to hear. I think that, are you with Wyckoff? Just to be clear, I heard you. Is that your camp?
I'm more familiar with Wyckoff than I am with Elliott Wave. We'll put it that way.
No, I like Wyckoff. Yeah, it's if that works for you, stay with it, man. It can it's I got no criticism with it. It's just that if you're coming at it from an Elliott Wave theory perspective, I would just say that Elliott Wave will add some extra meat to the bone, but there is no nothing wrong with Wyckoff. Wyckoff forces you to look at the bigger structure, and that's the main thing that you need people to get out of the here and now and looking at the price on the chart at a static moment in time that's disconnected from the past, because it's cyclical, and Wyckoff definitely forces you to see things in cycles just like Elliott Wave theory does.
Just to identify accumulation and distribution.
I know you were saying something. You were interrupted. Go ahead.
Oh no, I was saying I read somehow companies are having they can't get rid of their stock, certain stock, not price stock, but their retail stock, and how the retail is slowing down. I think Target, Abercrombie and Fitch, Gap, they have excess.
When you say
Target.
retail stock, you mean their items, their goods, right?
Yeah, they're goods. They're goods. They sell in their store. Yeah.
Okay.
And so I just bought an iPhone 13 for $50. And
fuck?
Yeah, from T-Mobile.
Wow.
And I was like, wow, like for real? And they were saying, yeah, we know you just pay for the sales tax. And when I read that report, I said, oh, no one was buying an iPhone 13, which then tells you iPhone is a very popular phone. So now, do people have enough money to buy that phone, or
not more popular?
Wait, bro. I'm still stuck on this. Did you say that you got an iPhone 13 for $50?
Yeah, 128 gigs, brand new for $50.
And you check the fine print. You're not paying for that phone in your monthly bill every month.
I double asked them because I couldn't believe they kept telling me $50.
Oh my God, I'm gonna get me an iPhone 13.
Which means they have a oversupply. No one bought the iPhone 13, and this iPhone 13 had good reviews when it came out, which means everybody wants the iPhone. Well, everybody, but it's popular. It's going to sell out. We know that. Which means
I'm the resident Mac man. I'm Mr. Mac.
When did it come out though? Did that come out 2020?
About 9 months ago. So last year, September.
So it came out and nobody bought it. Everybody's buying food or other things or what have you.
So that discretionary spending is getting smaller and smaller. If I'm able to buy
plus the fact, again, like you're saying, the 12, the 10 aren't bad phones. They're not like nobody's like I can't stand this 12, this 10.
Right. So they're and I know Dollar will mention this. They rather keep the phone they got and keep that going. Just like with the cars, instead of buying a new car, they might as well just fix up their old car.
But for $50.
Yeah, for $50, anybody should buy it and go out and yo, listen, get it just cause. But we're talking about indicators in a sense, right? Real world indicators of what's actually happening on the ground. So me being the pro trick that I am, I'm at the club last night and I'm talking to this chick, and I had some dealings with her a couple months ago. Let's just say there's false advertising. She calls herself wet. It's not as wet as I thought it would be, but whatever. And I got a video coming out about this. But she's telling me about what's going on. And the videos I already have uploaded. It is distractions are a pillar of delusion, the foundational pillar to the delusion that a lot of people exhibit, especially women. So she's talking about how she's working a warehouse job and she's still dancing. And the warehouse job is paying $60 an hour. She's also talking about a $300 a week weed habit when she's making $500 a week after taxes. Yeah. So it's just crazy. But the stuff that's happening, and she's got to be on assistance. I was talking to another brother of the space today, and he was just like, yo, she's got to be on assistance. And I was like, yo, I didn't even think about that. So you can probably pull off a $300 a week weed habit and still be dancing and all this other shit. And I'm like, this is crazy. But again, a real world indicator here for me is one, that she thinks she's dancing, but she still has to go and or she still has a day job, dances, and then a comment she made coming out of the club, I was getting something to eat. She said, all these niggas parking lot pimping, but ain't nobody throwing money. And I'm like, bitch, you sound hurt. You sound hurt.
Yeah. Hey, I mean, I don't need.
Dude, you gave her the "Who Hurt You" line.
Yeah, right.
You gave her the "Who Hurt You" line, bro.
In my head. But trust me, the video that's gonna come out, the conversation I had with that girl, I said, man, your life sucks, and I'm depressed. And she was like, yeah, I gotta live it. And I'm like, yeah, you need to stop that shit. But video coming out, I'll release it probably after this. I gotta do some stuff. But go ahead, Lionel, I think.
Hey, Sir Henry just said, rumor is companies may let you keep the returns instead of returning it back to them. I had this same thing happened to me with a deep freezer I bought. He said he bought from Amazon and let him keep it. I heard the exact same thing. Well, I read the exact same thing. That companies are letting you keep the item instead of returning it.
Yeah,
I mean, I can see something like a deep freezer because a little bit about my background on understanding mechanics, and like that's a high, like, freezers are so high marked up it's not even funny for the production costs. For the production costs and what's available to it. It's literally a cold box. That's just metered and registered by.
So we think that because it's big, it should be expensive.
Yes. And
now, also one of those things that people don't buy for, like, their deep freeze might last a decade or so.
Yeah, but again, you don't use it. Like, it sits there.
Right.
So you shouldn't get any wear and tear out of it because it just sits there.
Yeah, it's not like your iPhone.
But exactly what you think. Exactly what Dollar Will says. Because it's big, we think all it is just a box with some insulation.
Yeah, especially if you rip open one of the panels and you see just like this little thing is your motor or whatever, the freezer. Yes. And it's just like, that's it.
And a rheostat. It's really the electrical cord and a rheostat.
One thing I do want to bring up.
I'm saying it might be just. I don't think it's on every. I mean, it's probably on specific type items. That's all I'm saying.
And so
that have high markups.
So Henry's bringing this up. One of the things that I've seen personally is that they'll either discount the item a great deal, because then you have to start worrying about shipping costs, shipping it back to them, they getting it in their stock and dealing with it, and having to, probably discount it, put it on a pallet, sell it as pallets, especially with some of these Amazon warehouses. If you're in the local area, you can buy like pallets of these returned items as is, and then go from there. And then they get introduced or put on the, re-entered into the market. But go ahead. Yeah, eBay, right.
Now, again, deep freezers, do not confuse deep freezers with refrigerator freezers. I don't want you to confuse the two. They're wholly different in their cost structure, the value structure, their construction. Right? Don't confuse. Like, refrigerators cost a lot of money for a better reason because there's a lot more things incorporated within them.
Yeah, water filtration and all that other stuff.
Yeah, but freezers, deep freezers, it is literally, it's like if you ever took apart older dryers or washing machines, the older ones that we pretty much all know about, not the newfangled ones, but there's not much to them. There's really not much to them for the prices that they're extracting from you.
Yeah, I gotta get a new washer and dryer. Set my hands up.
If it's too heavy, like if the charge is too much for them to ship, I can see that happening for big ticket items. Now, an enterprising individual may be able to take that information there, and
to his own
and possibly utilize some, I don't know, net 30, net 40, net 60, net 90 accounts.
Yeah, and it's crazy, what. Oh, sorry. Go ahead, Lionel. I think.
Yeah, I was gonna say the long short of it. I think this market is done.
And hold on, I want to read Sir Henry. Companies have too much inventories. This is what comes down. This is what it comes down to, and it's hard for them to get rid of it. And that's true because who wants to buy a deep freeze when you got to worry about your gas bills and all types of other stuff? And also, why would you want to add a deep freeze to your electric bill? You know,
well, inventory. Okay, here's the thing: inventory is sunk cost, right? From accounting terms, inventory is sunk cost, right? So I don't know. I haven't done any homework on it, but whatever the latest right? Okay, I have a 1070. I have a 1070 GPU on my computer.
Yeah, you got the 3090s, and I think I saw a video about a 4090.
Right. So everybody Tiger Direct. What is Tiger Direct going to sell their 1070s for right now?
Yeah, little and nothing in comparison.
Because it doesn't matter what they paid, right? It doesn't matter what they paid to get the 1070.
Yeah, it costs more to hold it.
Right, exactly. Now, I mean, you're either going to throw it away or you're going to mark it down. You're going to mark it on the books down to a penny. You know what I mean?
Yeah. Yeah, like I saw a friend of mine sent a video in a WhatsApp chat testing the NVIDIA RTX 4090. And the fucking 3090 just came out. And like the 3090 is like a big ass fucking card, probably about this fucking big. Yeah. And he just got one, and the damn thing has a fucking kickstand to hold it up in the box. I was like, what the fuck? Like, that's a big ass fucking card.
Yeah. Yeah. 40K, 90 frames per second.
That's crazy. Like, I'm going to share my screen, actually.
3.7 gigahertz.
This is like, to me, insane what's out there. Hopefully I'm not, okay. All right, there shouldn't be any information. All right, cool. I'm going to share this here real quick. But it's just the stuff that, this is his 3090 next to his 2080 and then his 970. And like, this is the big ass freaking card.
Yeah.
And then you have,
I bet that heats the room too.
Right. Yeah. It's a freaking space heater. Like, this is his 3090 card. He's put, like, look how big that fucking card is, man.
Yeah.
This is fucking crazy. Look at this shit. And then this is the kickstand.
That's crazy.
Like, look at this. It's got a whole fucking stand to keep the fucking card up. That's wild insane. Shit to me.
That is wild shit. What does he do? What does he do? A lot of rendering?
He's actually a streamer. He does Twitch stream on his own, like, a personal time now. And but I used to work with him as he was like a tier 2. He's like the manager now, actually. Homeboy Miguel at my old job.
I'm just curious because i7 the 1070, the 1080. I was like, man, I was like, once I crossed over to that, I'm like, I don't think I'll ever need another card.
Well, he's one of those guys that he has to get the latest and greatest in that type of technology. Like, yeah. I've been out of building computers for a while. Like, I'm more like, yo, listen, I just need a Linux server that I can terminal into and a decent little laptop. I can use a Chromebook and be, to do all my work.
Have we reached the point where 90% of the market or computer users, the current state of the technology exceeds their need?
Yes, in my estimation, yes. I am on my last tower. I will never build another tower again.
Oh wow. No, yeah. I bought a laptop back in 2012, and I said that's when I got away from desktop computers, towers.
I was also a gamer.
Then when the Mac Mini came out, I said game over. Game over. You'll never get any in the Mac world. the average user doesn't need anything more than that. And
Well, I was also a pretty intense gamer, and I was playing a game called Arma 3, which is very graphically intense. And so I was recovering from a deal, and then I told myself I can't play video games until I make some more money.
And well, so, for me, it's like you age out of it. Like it's like I don't care. I don't need that type of stuff. I don't play World of Warcraft anymore or any games. I mostly work, and then the stuff I work on are like virtual machines, and they need the compute power. I just need enough power to display whatever's on the screen.
Yeah, I was the Madden king, and I always rationed it. I'd rather have a dedicated box.
An elder Madden king.
Yeah, I was the dude.
Like
man.
Again, what you can get in, you can get laptops that are at or exceed basically what you can get for the same cost in a tower.
Mm-hmm.
You can get that, and the gaming laptops out there exceed the purposes of even VR right now. So outside of somebody who does a lot of video rendering, correction, CAD, that type of thing.
Yeah.
I don't, and most people aren't a part of that, so.
Oh yeah, the Power Edge.
Yeah, the Power Edge server.
Yeah,
Even these right here, like nobody's doing on-premise servers. Everything is either co-located, you're remoting into it, or you have a cloud offering such as something from Azure, AWS, GCP that you're actually working with. So even these servers here don't make any sense unless you're actually, your back-end host or something like that. Also, when it comes to jobs, I've been just getting hit up like crazy lately, and something recently. I won't talk about it here, but something happened recently, and I've shared it with other people on this panel and also. But it's the thing now is. I was talking with another brother of the space, and I said, bro, if you're going to get into anything right now and you're not a networking person or a coder, you need to, and you want to be like a systems administrator or something like that, the quote unquote simpler side somewhat, you need to be getting into cloud, being a cloud administrator or a cloud system administrator. So knowing all these different platforms, how to deal with pricing, what to choose, all the products that are available, such as load balancers, other front end and proxy servers, and anything else that's out there, because everything has a cloud offering. Even your firewalls from Palo Alto, Cisco, pfSense, all these things can and will be virtualized. Did somebody want to interject? And I'm gonna go on to what I want to show here.
No, I was just nodding in agreement, basically.
Yeah, I just wanted to add to how this tied into the trading thing and the cycle in trading. That when the economy slows down, corporations, they don't spend that money on their equipment budget. They make you use the old equipment till the cycle ends. So you end up you have the computer manufacturers trying to push this new stuff on the companies, and the company's like, well, my old legacy equipment works just fine. And so that brings the prices down. It just makes everything,
Or you can get a cloud offering that's a lot cheaper, because you can do things like turning things on and off at peak and low low usage times, or peak and non-peak times. So for instance, in the morning, all your users log in or use a web service, but then around lunch it goes down. So you can shut down 2 or 3 servers out of your pool, and then you can spin those things back up, maybe even have a max of 5 or 6 servers in the morning, and then that dwindles down around lunch, expands again into the latter half of the day, and then shuts down overnight where you have just 1 server. So you can deal with that lag because not too many people are working, and then the cycle continues. So you can do things like that to cut your costs. And if you're using something like GCP, it will tell you, hey, you can save $390, $1,000 a month, blah, 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 if you do X, Y, and Z with your server, because they're looking at everything for you and telling you like, oh, you don't need all that. And then also that's a value add to the platform, because Azure says things like that, but not always. And then AWS, I don't know about too much. And also, by the way, if you go on freecodecamp.com or freecodecamp, the YouTube page, there are AWS entry-level certs or AWS entry-level cert courses. And I think the second level, like being a practitioner or something like that, where they're like 8-hour, 15-hour courses that are like $20, $30 on Udemy, if not more. The guy's giving it out for fucking free. It's kind of crazy. So yeah, if you want free code camp, Brad Traversy, and those are kind of the main ones in terms of if you want to learn new technologies, learn coding or anything else like that. Those two alone, and they'll stub off to others because once you free code camp, they got like I think a 15-hour Go language course or Golang course, which is Google's compiled language course.
Yep.
Iori?
I saw it. Yeah, that's one of those that I saw because that's.
You read that? You listened to that one?
Yeah, because shout out to actually I found it on Women in Linux. They were talking about it because they were talking about like different things in crypto and stuff like that, and I looked at a lot of the crypto stuff, and they're using Golang as some of their languages that they're using. So I went on Free Code Camp. Me and a buddy did that. I don't want to take full credit for it because we kind of found it together. We saw that Golang course on Free Code Camp. So
sorry, I was on mute. Yeah, and it's like it's a testament to the open source movement in terms of sharing information. I'll bring it up here before I make my next point, and this goes to something that Judzilla was talking about, Free Code Camp. And I always, plug these channels along with, of course, plugging WIL and others in the space. But, you have full-on courses here for AWS and anything else under the sun. Terraform, if you're actually getting into cloud computing and, and system admin cloud computing, bro, Terraform is like the shit and allows you to, spin up resources on the fly, and you can deploy an entire infrastructure, what have you, on all the different clouds, and you can have it all defined as code. So infrastructure as code is pretty much what that's called, and then that infrastructure as code or IAAC, infrastructure as code, or IAC. Yeah, IAC. And then you have IaaS, which is infrastructure as a service. That's why I'm getting confused. Sure. But IAC integrates or talks to an IaaS, which is your infrastructure as a service. So that's AWS, GCP, Azure, whatever other cloud provider that's out there. Provisions whatever you need to, even Heroku or something else. Provisions whatever you need to, and it's all as code. So your whole infrastructure is defined in a actual code block or series of code blocks and files and sister files and stuff like that.
So would you go through like this type of stuff after you would go through something like I don't know if you want to say like I don't know if you're familiar with G Lowry.
Like A+? Oh, go ahead. What lottery?
G Lowry. Are you familiar?
G Lowry? No. Explain, please.
He's got a coursework that he goes through.
So you can do it however you want in terms of what order.
I'm just saying it's also free online.
Oh yeah,
it could be a supplement to that. It could be a whole weekend curriculum for you, if you will.
Yeah. It's separated. I know what he's talking about.
It's his stuff's free on Yahoo as well.
Right.
YouTube as well. Sorry.
The stuff that Tech G does is a lot more on the
just entry level entry, right?
Yeah. So it's this stuff from a tech hierarchy perspective is probably going to pay you more than the CompTIA stuff does. But
that's what it is. CompTIA stuff, yeah.
Yeah, the CompTIA stuff will get you in the door if you want to go through that route. But
this is again. Let me just make this disclaimer. This is not my wheelhouse at all.
Sure.
Well, I will add to something before you finish your point, and maybe I'm taking your thunder here, but I will add to what you're saying in terms of, you know, all the things that you can do. Like I tell people, hey, listen, get the CompTIA, the Network Plus, because those are the old guard type stuff. Now you start, once you get that baseline, that foundation in terms of your certificates and things like that, because
that's where my questioning was running. Yes.
You're saying?
No, I said once you kind of get your first job, I'd run straight to the cloud.
Yeah, good point.
Cloud and Linux and all that stuff is gonna really be where things are.
And shout out to our brother here. What's it called? Keep it techie.
Keep it techie. Yeah.
Keep it techie is on free code Cam. Let's go.
That's right.
I'm excited about that, man. I didn't even know that.
There you go.
Yo, listen, man. Hey, listen, Keep It Techie, another great channel. That also reminds me of another great contributor and commenter and supporter of the space, Aqua Techie, and then of course Sheed We Here and stuff like that. So all these people, man, like, you know, but this is a big thing for not just the space, not for just black men, or not just the space, but black men in general. And we're out here, and like Keep It Techie has such a well-polished, illustrious platform, and he's always been an advocate of black technologists, and then of course black Linux users as well. So this, I'm super proud to see this. This is fucking cool.
And that's why I'm always other places picking fights when people say black people haven't progressed. I'm like, what?
Yeah.
Right.
We're working for too many white companies and governments making salaries that we were not making in the 70s and 60s. So that's ridiculous. But when you keep hearing us saying, you know, we haven't accomplished anything. We living in homes. Our home ownership rate is greater than any other time. We have like lots of black folks have like real retirement accounts. I mean, put it together. This is the all-time high in stock market. We're still at these all-time high levels, and so therefore black folks that have had these jobs for 10, 20, 30 years, imagine how fat those retirement accounts are. So yeah, I just thought I'd slide that in there, coming out off of this Juneteenth, and people were saying we haven't accomplished anything.
Yeah, listen, this video is at 10K likes, and it came out February of this year, February 23rd. I mean, this is just beautiful. A pretty decent comment section, even for especially for a tech video. 341 comments. So this is great. Yo, brother, this was one of the best explanations on introduction to Linux. You like a pro, please make more videos for certification, like a Linux Plus certification, which I am Linux Plus certified myself. It would be unfair to my conscience and humankind if I watch this video without leaving a review. I have watched a couple Linux videos on YouTube, and I can tell you that your teaching pattern is 10 out of 10. You broke it down to the level of that any layman could comprehend. Thank you so much. And that's a brother of the space that's been in the space that has pushed technology fucking amazing. This I am proud of, dude.
Doing the damn thing.
Fucking yes. This is
100%.
Wow. That's crazy. I love that. All right. Going on with my point in terms of something that what's it called? Judge Zilla was talking about is technology and how cheap it is, and buying your last tower, so to speak, and how you can have a tower that could last you a couple years. These are your Dell Precision systems, and Dell Precision systems are your CAD systems, mainly video production, 3D design and stuff like that. So these are your powerhouses. These are pretty much fucking servers, but at your desk, essentially. So your Dell Precision T5810, 8-core, 3 gigahertz, 96 gigs of fucking RAM, and a 1 terabyte SSD drive, Windows 10 Pro at $1,099. Now that shows you what's going on in the market in terms of technology, where you can go out and buy these desktops. You don't have to build a tower or anything. You can get these used off-lease systems and get them for, you know, a pretty, like, that's very cheap. And, you know, you can get, you know, newer gaming laptops and stuff like that, and they still won't have the processing power. A lot of software is still not made to actually handle the processing power that some of these systems have. Sadly, they're catching up, though. Of course, multi-threaded processing or multi-threaded or software that uses or that has multi-threaded processing embedded, or what's it called? I want to say they utilize multi-threaded processing. That's the way I should say it.
That's the thing. It's got to be. It's got to have that enabled. Otherwise, there's no point in having the ability to have the multi-thread.
Server grade versus consumer grade. That's
or rather the separate cores, because if it doesn't utilize separate multi-threading, then you're just going to bottleneck.
Yeah, at that point, you want to take a system like this, turn it into a hypervisor, or a virtualization host, and then host your other small systems on it. You know, you can do that as well. That's the only way you can really use some of these boxes nowadays. They are just for virtualization. Yeah, but that's just what's going on with the technology. There's a lot of places where you can go out and get more information. I just got hit up the other day about becoming a Zendesk API specialist, and you know, when you get into that specialty realm of things, working in that sector, man, you know, that could be good money as well. Working with REST APIs and other web technologies.
For sure, that's the availability of things that are out here that people can utilize to just like I said, with the Keep It Techie stuff, Tech G stuff, this free code academy. I mean, you can literally change. You can live off of you can live off of beans, rice, and hot dogs for a year, and change your fucking life.
Yeah. Within seconds, or within, you know, after a good amount of work, and then you get that offer letter. You know.
I mean, that's what the hustle and grind really looks like. What you just said, eating beans and franks for a year or two, whatever it takes to get it. That's the real hustle.
Mm-hmm.
Oh, Revit.
And nobody wants, but too many people don't think that they have to go through that, though. That's the problem.
Yo, look at this shit. They're doing fucking Revit. Yo, well, for people that don't know, Revit is an AutoCAD product, or an Autodesk product. And Revit, you can do, I think, 3D modeling. So you can take your 2D, drawings out of AutoCAD itself, and then also make them, you can do 2D, but then you can make 3D images off of that as well in Revit. Revit is not fucking cheap license-wise. And then also this guy's giving a free course that is 4 hours and 40 minutes. And he's giving it on Revit. Like, look at this. Like, look at the, you know, he's doing all the 3D modeling for a building and everything like that. He's going through it. He's also rendering it here on the side.
Damn.
Like, that's fucking crazy. And like, this is free. This is free. You can learn all this stuff. You can become a quote unquote pro or junior level developer. And then as you're becoming a junior level dev, you can increase your skills and then, you know, go off to be intermediate, senior level.
Yeah.
And they're looking for coders like crazy. You know, there's just not enough coders. The only thing I don't like is there's not a lot of junior dev jobs. A lot of jobs are being labeled as senior. That's one thing. It's senior. And I mean, there's a lot of things that I had to go through even recently with that. And it was just like, Jesus, why?
And this is on the same Free Code Academy?
Yeah, Free Code Camp.
Free Code Camp, sorry. Free Code Camp.
And I think the reason I make
can you go through and check to see if they have if they have a course on will she or won't she submit?
I think that is a different type of program, my brother.
That was perfect, yeah.
I think that like look at taxes for freelance
That
developers.
is the question.
Wow, like this is also a good course here too.
Is there an algorithm to make you select, bro?
Yeah,
Oh man, there you go.
I love that.
I can play that stuff too. Yeah, I've been in this space for a decent amount of time, man. Go ahead, bro. Go ahead.
No, I love it. But you know, like this is also a good thing. If anybody's a part of the overemployed movement, you know, understanding taxes for freelance developers, understanding taxes for 1099 projects, W-2 projects, the differences and what you have to do. If anybody's known about the overemployed concept and what that entails and what that means, you know, there is like, you know, I'm not really a part of it. That's like a lot of work, but there's a lot of things that you have to consider when it comes to being for me, I was an IT consultant for a long period of time, and all the taxes and stuff that you have to go through in terms of making sure you have that money at the end of the year or in the next year. So you can pay your taxes and everything like that and having everything aside. So this is really cool how they're expanding the quote unquote brand and hitting so many different things, not just your coding and your tools, but also what you as a coder and a developer have to deal with. Like I have to deal with these things for some of my side projects, especially, and deal with that, like, you know, deal with it, like, you know, after hours and, you know, doing all the stuff. Like today I had a working session with a brother, and, you know, it was like a 2-hour working session, you know, like how do you bill for that? What do you use to keep track of your time? Also, how do you keep track of the money that you're making sure you have the proper accounts, so on and so forth. So this is actually a really big course right here. I think, even though it's 1 hour, I think it's a really big thing where, you know, you need to focus on things like that as well. Oh, wow. Internet history. That's another thing. That's a good thing to be a part of too. Guys, I appreciate you guys so much. Let's do our final thoughts on what's going on, because we've gotten off the beaten path and gotten into technology, which a lot of this stuff, you know, there is a correlation, but that's not what we're really here to talk about. But so the title of this was Finance, Cryptos and the Fools That HODL. I think with what's happening in the market, and I'll go first, but I think what's happening in the market is something that can be, something that is going to be big to a lot of people's future in terms of how much money they're going to have going into retirement and what they need to do to protect those assets. That's more of a dollar will thing, is to protect those profits at any and all costs. And making sure that you don't lose your profits because you're on that hopium drug, or hoptimism, as I call it. You know, your enthusiasm, your optimism and your enthusiasm and your hope all coupled into one, and you have your hoptimism of sorts. So, you know, I think this is a good time to build a decent portfolio, but with what? The right stuff. The right coins. What are the right coins? You're going to have to do your research. What are the right stocks? ETFs, you're going to have to do your research. You're going to have to look at these things, and you're going to have to imply things like technical analysis to predict or help you predict or make a choice. Who wants to go next? Will, Iori, Lionel?
Yeah, I'll go ahead and go. I'm gonna tie it in to what you were just talking about, technology, because I also got into a dispute with a guy, this blockchain developer guy. Mm-hmm. He had a lot of faith in his. He said people should invest in it without concern about a return. I said, what? What? What the fuck? Yeah. Okay, if you don't own the technology, you either an employee or an investor. You can't love it that much to that degree. Learn about it for your job security and all that. You know, but like I always say, you got in capitalism, you have three relationships in capitalism. Three. You're a laborer. We know all about that coming from slavery, and an employee now, which sometimes is almost like a form of slavery. And now somebody pissed off. It wasn't slavery because under slavery, you know, they didn't earn money. Yeah, but you had free labor, you had free housing. You had free housing and food, okay? Now you out here struggling to get a house and food. So, yeah, it's much closer than you think in slavery 2.0. Okay, back to the point. So you can be a worker.
Wait, are you saying slaves had it?
I'm saying that being a worker, being a laborer, an employee with debt bondage is not that different from being a slave, being a slave with the slave master providing you a home and feeding you. Okay,
we'll cut the difference and call ourselves serfs.
Yeah. So it's yeah. Anyway, the point is, you got three relationships with capitalism: a worker, a business owner, or an investor. And in your life, you have to become at least two of those three. And most of us do that via investing in stocks in our retirement account, if nothing else. But your job is not going to save you. It really isn't. It's not how much money you make, it's how much you keep. And the big myth is that the poor are in trouble. No, the upper middle class are in trouble. It's a lot of people out here making 100,000, 250,000, and they live like they make 250,000. A lot of I'm from the DMV area. It's a whole lot of these McMansions with no furniture in it.
Dang. Okay. On a mattress on the floor type shit.
Yeah, you go to that nice big house and you're like, dude, we ain't gonna put some damn furniture in here. They ain't had no money for the furniture. Okay.
Yeah, they're talking shit like, oh, we're minimalists.
Yeah, right. Well, we used to call it back in our day. That's called being house rich and cash poor. Okay, so you're not safe just because you're in a field that's growing. Okay, because when the economy starts downsizing, you know who gets laid off first, especially if see the thing about the technology folks, they are anti-union. It's something, and I led a union movement, and it's a problem union have to fix. And there's this middle class concept that people equate union with blue collar, and so now we have all these folks with college degrees working in tech fields, and so they don't want to be in a union because that seems like a low class thing. They think they are higher up the chain than they actually really are. They're not as high up the chain as they really think they are. They're still below the line. They're not making final decisions. When it's time to decide who stays and who goes, they are not the ones making that decision. And so when the economy starts to downsize because the interest rate went up, because we are entering into compression of the things. We're not going up. We're not getting larger. We're going into like austerity programs and stuff like that. Okay, you start talking about just-in-time production. Okay, no company wants to have nothing in the storeroom. We're going to start hearing things like, "Would you like to take a rain check?" You know, some of you maybe never heard that in your life. You go into a store or something, they don't have anything in there, and you know they give you a rain check, and you come back later and get it because they're going to order it and deliver it. And then they want you to put a down payment on it, you know.
Yeah, not your usual box store or your usual retail stores and locations have become drop shippers of sorts.
Right. So it doesn't matter that you have a high paying job. You're going to be downsized. A lot of folks are going to be downsized. So you got to make that money while you can make it. And then you need this knowledge of technical analysis to help you learn how to keep it. You know, so I think it's great. Go after these jobs in security and AI and blockchain. Do it, but marry the technical analysis in it so you can also get into that other camp of being an investor. You know.
With that being said, too, before we continue, this is one thing I forgot to bring up. I'm actually interested. I'm you know, I've already approached the gentleman and gone through the or started kind of the courting, the back and forth of, you know, possibly buying into his business. He has a car wash business, pretty good product, made my fucking truck look brand new. And one of the reasons I really want to start it is I want to get into more services business and start bringing big city, big area services to a small town, such as mobile detailing, coming to your home. Because there's people around here with money, but they have to go somewhere, sit down, wait a couple hours for car washes, and then leave. It's like, well, no, we can come to you and provide this service. And I think a lot of people aren't, like, you know, there's not enough people doing that, especially around here. Like, we don't even have Uber around here in where I live in Southeast Georgia.
Do those mobile barbers make money? Is that business work? Does that business work?
It does, but you're going to be paying a higher price for the cut. And I think that works for people that have a little bit more money,
like a high-end clientele.
Yeah,
somebody who don't want to go sit in the barbershop.
Yeah, like, because, you know, like I remember, because those same barbers that are in the shop, they will actually go out and they have those. I forgot the guy, Ty Law, I think it was. He lived in Florida, and my barber used to cut his hair. And I had to take my barber out there one day, and he had a manservant and all this other stuff. The guy was like, "Would you like a Powerade?" And I'm like, "Yeah, yes, I would." You know, like, and but it's like those people would get it more than anything, or actually, even mother, like, you know, when they have multiple kids and they don't want to take their kids to the shop, and they could do 3 or 4 heads or something like that. Something like that works as well. But
with daycare, you know, I don't see that business ever losing money investing in a daycare.
I was thinking about that, especially after Roe v. Wade.
But
there's going to be a lot of government subsidies because of this.
But just in general, for anybody watching, any business you want to go into, if the business was around back in the 2000s, do your research and find out how that business fared between 2007 and 2009. That's what you want to know. If it didn't, if it struggled during that period, you might want to, you know, postpone that. You know,
right? And that, I'm like, I'm thinking about that as a primary service business in terms of the car wash stuff. Then mobile detail, like growing the business, laying a proper foundation at his current business and improving it, and then growing it into mobile detailing, and then growing it into fleet detailing, and then growing that even further into like doing contracts where you clean pressure washing gas stations, which I saw one time, and I've always been like, you know, thought of like, wow, this is actually a decent business opportunity and a night job where you can go to gas stations, pressure wash, and then go out.
I had a pressure washing business.
Oh yeah.
Oh, how was that?
Maybe we need to talk about that more too.
It was necessary for me because of some hindrances that I put upon myself.
I mean, because I had a guy I used every year to come pressure wash my. I had a aluminum siding house, and so I used it. I
gotta actually get my house.
I had to get out of it. I didn't structure it. It was my first business, and I didn't structure it the right way. So I had to get out of it, but I got out of it profitable.
Wow.
But yeah, I had built it up and I got out of it profitable, but I got out at a good time for my business.
Well, I mean, honestly, that's better than me getting out of my salon and losing money and still having debt because of that.
I unfortunately, I mean, you can call it what you want to call it. It's still, the business is still up and functioning. The person ended up selling it, and somebody ended up making, you know, so it's making somebody, it's making somebody, it's putting food on somebody's table. But nice. I structured it poorly, and I had to get out from under it before I saw the writing on the wall. I had to get out from under it.
Yeah, I mean, I'm looking at even this current business in terms of growing the services, using what the guy already has established.
Yeah.
Then growing it from there, and like,
if you set it up the right way, it can be very, very good, very, very lucrative.
Okay.
I didn't. And that's what I'm saying is,
yeah, me neither. I've been bad at that in my previous businesses. For sure.
That sounds like a good topic for a whole show, because I really want to hear this story. I came back and did a whole show on, business do-over, and just let us know, like, what you would do differently. That would be great.
I did have a video I posted about that, but then also another thing is, I mentioned courting. Some people be like, courting, you're courting another. No, like, there is a courting process when it comes to you approaching a business owner and saying, hey, I want to invest with you. It's not just throwing the money at the person, but can you vibe with the person? Will they listen? Will they actually listen to you? Because there's that personal relationship, that connection that you also have to have with the person, and say, like, okay, I can trust this person with my money and me not being there, because I don't want to create another job for myself, which I've done in the past. And it's like, I don't want this to be another job. I just want this to come in, check one or two things. I already have a day job and a career, and going from there. Right.
Yeah, no, it could definitely be set up. The equipment, the equipment purchases, or even rentals or leasings. It's a very, you can get crews out. It's about getting out there, getting the appointments set, and just getting out there and taking care of it. I recommend it to anybody who's in a crunch that doesn't have any skills. It doesn't take much to build the skills for it.
Yeah, and I think, the gentleman was talking like pretty low numbers, especially if you have a good amount of disposable income. You're making six figures, living in a rural area like myself, and once I pay off a lot of stuff, I'm thinking 6 months out. That's another thing. A part of this is, like, you're not just getting into the business and saying throw money. It's like, no. I'm planning 6 months out. Like, I'm not talking to you, like, because there's due diligence. Like, there's understanding who the person is, understanding what the business does. Does it make sense? Then you have to get into due diligence. So that's getting, looking at their books, looking at what their accountant, having an accountant, looking at what their accountant provides, if they don't already have that type of stuff. So then you're starting to look at, like, hey, listen, you don't have any books? All right, cool. I want to get into your business, and I want to make sure that this makes sense. I need you to start putting books together, and I need at least 3 months worth of books. And that's not enough. You really need a year, maybe 2 years, and hopefully can go back to downtimes and see how that looks.
You need 2 years to get anything SBA wise.
Yeah, especially for a loan. Yeah, for sure. Yeah, you need a business for 2 years, and then tax returns and all types of other stuff. Right.
Yeah. Just tagging off of Dollar Will there. I guess I'll tell, given the title of this. Yeah, HODL.
Okay.
It's these are mistakes that you hope to make only once. I've made the mistake. I've wrote an account up to $118,000 and wrote it all the way back down to not
$118,000. I hear you, man. I got some numbers I can't say publicly either. I really have paid the stupid tax, man. I need to go on stupid tax recovery program or something.
Yeah. What's worse is the understanding that, had I have just not been on that hopium or that extra greedy motorium,
another drug.
I could have sold and then bought back in. Fortunately, I mean, and when I say that, I'm in that position. I'm in the position. This is a past and a present situation. I'm only 5% down right now.
Okay.
In this situation, so we'll see what happens here. Yeah. But so that one it strikes a little bit close to home on that one, because that's why I came in there coming in there claiming Bag Holder Inc.
Yeah, I'm definitely a bag holder, and I'm also a bag adder. Like, I am making that bag heavier. Like, I'm looking right now, especially with Ethereum. Like, yeah, I'm trying to put $1,000 a month into Ethereum, and I want to get up like 20. I can 20 Ethereum is doable.
Okay, why not just like take the money, the $1,000, put it in a savings account, and when the price starts making those higher highs, I mean, you're hold on, dude, hold on now. You're in the Patreon group. You got a lot of eyes in this group watching that Ethereum and Bitcoin chart every week. We talk about it. There's like not a good chance that thing is going to change course and all of us are going to miss it. You know, you got Aori, Lionel, Nelson, and we on that thing every week. So if you stack that money and kept it safe and just savings, and then when the right time comes, you drop that whole big wad on it at the right time. That way you hit the ground making profit. You don't have this hole you got to dig out of.
First off, ease. I'm a person that believes in dollar cost averaging. That's one thing. And then two, in terms of the market and looking at
why not dollar cost averaging something that was going up like the USDC? See, that would have made sense.
Listen, I have my coins. I have my list of like 6 or so coins that I invest in. USDC is not one of them, and it's more of a stable coin, if anything. So it's not going to go much more above like $1 or so. But really, it's like ease. Like that's like, okay, why would you invest in ETFs and not in the individual stocks? Well, it's easier just to put your money in the ETFs, and then it gives you a little bit of diversification all in one shot. That's the ease argument. And then also, if it's at $1,000 right now for a coin, if I keep putting it in, and I believe that it's going to go higher than that, not just because of recency bias, but actually looking at the product, has the product really changed? Has the actual coin really changed into what it's doing, or is the current price based off of the market? And the current price is based off of the market. It's based off of what's actually happening around the world and other markets, of course, such as your stock market. So
the market is the worth.
But this is why I tell people all the time. Was just like, I use the analogy: if you had a bad bitch, right, and today she's charging $300 for the pussy, right? But then tomorrow, the bad bitch hasn't gotten a disease. She hasn't gotten a boyfriend. She hasn't had any drama. But then the bad bitch is $100 today. I mean, are you going to be like, well, it's $100. It's cheaper. I don't want to get it. Like, no, the pussy's on sale. Go ahead and buy it. Stock up on it.
But I'm gonna say my piece real quick, and then I'm gonna let y'all have it. Thanks for having me on. I appreciate it. That's all I'm gonna say.
Yeah, this is the longest closing statement ever.
Yeah.
And it's all my fault.
That's my closing statement.
Oh, go ahead, Lionel. I was just reading Alvin's.
My closing statement was thanks for having me on.
Oh yeah. Thank you, Lionel.
Alvin, we cook on that Patreon, bro. So I'm gonna put it to you like this. I'm going to take my case study for it. I walked into Dollar Will's Patreon, got in the next week for a consultation, and I told him, look, I'm here for the next 12 months. And my account pretty much tripled. I ain't saying that's going to happen, but if you put the time in, you're going to get mauled for the first couple months. There's a lot of stuff, like a lot of articles you're going to be reading, a lot of videos that's all based on trading. But if you put the time in, like, you can't lose out here, bro. Period. You can't.
I'll say this. I am not a member of Dollar Will's Patreon group. I will say this. It's not because of any qualitative issues or anything that I have with it. I just started from a different position, went a different way. What I will say is, on this panel right now, you have two people that in this Black Manosphere space Dollar Will and Lionel had the highest perspective of changing people's lives. Unfortunately, their views didn't always get the respect that they should have fucking commanded.
Correct.
As well as Iori being there, who I've talked to Iori for the better part of 2 years now, and significant insights. Things. So if you have these three people in one place to be able to, along with Grizzly, to be able to.
No, don't add me with them. Them motherfuckers smart. That ain't me.
It's a valuable. It is definitely worth a look in the insight. At least a look to get in the door to see see what you can see. These are. I know this is not their channel, but get in there. Like I said, I'm focusing on something different. I was doing more of Forex, and I'm doing more of Wyckoff, which is different than the Elliott wave that they're doing. And I got drilled into that. Otherwise, I would have been right over there. It just happens that the times that we interacted with that, never have had anything but respect for all three of these gentlemen and the host of the channel. And we don't always agree on everything. We have disagreements, but we disagree like gentlemen.
Sure. Right.
And it's no
it's like a fuck you, but respectfully.
Yeah. It's issuing the points out, and you can follow it, you can listen to it, you can not, but it's always logical, reasonable arguments. It's not, it's so I can't give any more kudos to no disrespect to the host of the channel. But Lionel and Dollar Will in this space, I think it is criminal how undervalued they've been in this space.
I would agree with you.
Thank you, brother. Thank you.
100%. That's a lot of people don't realize this, and I'm gonna put this out here. After I met Dollar Will, I told everybody in the space. And Complex knows because I told him on his channel, look, bro, I ain't gonna be here for this who's the hotter bitch or why ain't I getting chosen or any of this other shit that ends up happening to me. I came here for one reason. I just wanted to deal with positive people. Like straight up. Everybody knows. I mean, I've been talking about the technical stuff, the stock market stuff, the e-commerce stuff, like everything that I do. I mean, the real estate stuff, all this stuff since I've been here. And I showed up here in 2019. But when I met Dollar Will and really got cooking there, I was like, look, man, I love y'all, but I got to leave. And ever since then, I've been there every week on every particular, chart chat or whatever we got, because some people really don't understand, like, the information that's been trading there, that's life-changing information, man. Like, look, I grew up going to a high school that I didn't have no big net worth or nothing like that. Like, my upbringing is like Dollar Will's, right? My dad does real estate. My mom was an ex-school teacher. I didn't have I didn't come from anything like that. So to be able to be in a space where we're really doing this in real time, we ain't doing this in a space, oh shit, like 3 o'clock Kramer's on, 4 o'clock options action. Like, we're really doing this in real time. And a lot of people don't really understand that shit, right? The value of that is insane. And even when I get tripped up, I know where to go to get my head on straight. Because, like, the other thing is, these markets are going to confuse you. They are. You see these things, I was talking to Judge, and I was talking to Judge on Friday. Hey, man, like, this S&P is looking kind of, this, that, and the other. And so him and me compare notes. Me and Dollar Will compare notes from time to time. Like, this is not a solo activity. So for you to have a situation where you've got a whole group of people willing to help you, like that's crazy, bro.
Yeah, even Lionel and I, we talk often. Like Lionel will hit me up a lot more than I hit him up. So, and then the thing is, he'll hit me up so he can improve my thought process on a lot of stuff, or we share information.
Oh yeah, shout out to Nelso too, bro. Like, don't think I forgot you. Like, shout out to brother Nelso too. Like, him and me compare notes. So, I ain't on Discord no more, so I can't bug Lionel. But
right. But that's the beauty of the space, is that people are putting themselves out there and exposing themselves, or even just giving up a little bit of their free time, what little they have, and putting this information out. Now, Dollar Will, I believe it's Sunday that you have your panels where you go over this type of stuff. I think it's on Sundays, right?
Well, yeah, it's on Sundays when the football season ended. I'm an NFL Dallas Cowboy junkie. And so when the season's over, I asked, if it was more convenient. So people basically say it was more convenient to meet on Sunday, so I moved it to Sunday. So the way it goes is, I put up charts during the week and videos. So I don't really put a lot of stuff up on my YouTube channel, as y'all can see, but I put videos up, and they can go. Sometimes it's several hours. It can go now. Be getting deep into a chart, okay, and correlating it with other charts. And so if you hang with it long enough, you'll start to understand it.
And what's actually good about, in terms of the value that you provide, is that I get emails all the time. Patreon, Dollar Will has sent you a message. Dollar Will has sent you a message. Dollar Will has sent you a message, like multiple times a day in some cases. Yeah. And me even joining one of the Sunday shows or Sunday streams and watching, the breakdown, and like how it was just like a nice small classroom of like, hey, this is a chart, and then getting into it. I think it's bullish divergence or something like that is like one of the terms that I wrote down in one of the streams that I or the stream that I joined. And like, it's just like that you come away with it with not just a wealth of knowledge, but a lot of things that you have to start to research and then come back with, which is beautiful.
So basically what it is, it's individual training if people want it. It can be one-on-one. Like, for example, when Lionel booked a time. There was a certain day and time. And he said, I want this time slot until further notice. And that went on more than a year. And then when I already joined, same thing. He said, I want this, 1 or 2 hour block for, until further notice. And so it's up to the person if they want to open that up to let others in Patreon come and sit in. Like, you can come and sit in the back while the person whose session it is gets everything they need. And then later I'll open it up and address whoever's like in the bleachers, with some questions. But then anybody in the Patreon can book their own session, and they can choose whether it's private or public. And, and then Sunday session was an idea pretty much from Lionel that we get together as a group and kind of survey the market, and so that's like a group thing. So it could be group or individual. And then I'm also, like I said, just posting stuff that I'm trading. I'm also I've been a swing trader for a pretty decent, pretty good, better than average swing trader for a while. My personal growth objective is I'm trying to tackle this day trading thing. This day trading thing is rough because it requires a whole nother level of discipline. Okay.
Right.
And so I share my journey with that. And the goal is for me to get on with one of these prop trading firms. Prop means proprietary trading firms. And these are firms where an individual, usually, you're trading their money, and the typical split is 80-20. where you keep 80% of the profits and the house keeps 20%. And so you're using somebody else's money. So you could be, it just gives you access to, it can get to be extremely large amounts of money. And so, you know, if you lose the money, you don't have to give anything back. You just get fired, you know, but, you know, so that's a way to do it if you really want to scale up and you don't want to subject your own money to it. And it's just, that's one part of then the prop trading thing. This is just my personal goal, is that I found that you're more responsible when you're trading somebody else's money. I don't know why that is, that you will protect somebody else's assets more than you will your own. I can't make that make sense. It's sort of like that team concept. When you're on a team, you'll work harder to do your part on a team, whereas if you were working solo, you would let yourself slack off and you'll make all kinds of excuses because you don't have to be accountable to anybody. But when
that's the social programming, so to speak, that we've all been ran through, and it's crazy how that works. You know, like I remember reading books where it's just like, if you're working at a job, or like when I was doing consulting, I read a book of how to start your own consultancy. And one of the things they said is, you know, go work for a consultancy and then run it like you would your own business. And it was just like, you know, a lot of people don't think that way, because it's like, okay, when you're running your own business, it's totally different in terms of how you're going to handle it, you know, and you could see where you would fail, of course, with your interaction and how everything else, and with other people. And that's kind of the programming of it all. It really is. Like, a lot of people just, they don't even understand it. And then when they get in their own business, they're like, why am I failing? I did so well at my job doing the same thing. And it's like, no, it was like, you did it that way because you were programmed that way, in a sense. It's kind of crazy. Very crazy. So with that being said, you know, dollar will has a lot of value. A lot of these things, when it comes to dollar will, it turns into a dollar will infomercial, but for a good reason. As you, like, you know, he questioned, you know, how my look on Ethereum and how I'm going to be a bag adder. And this is where we would, you know, our thoughts, or our principle, or our patterns would diverge to a certain point. But then I have people like Dollar Will and Lionel that would check me on, like, why would you do that? And then they also live in my head rent free when I'm making these decisions. And I'm like, should I be doing this? Should I be waiting? So on and so forth. But then I'm also one of those guys that, how Dollar was talking about, trading is so hard. Day trading is so hard. I don't want to do that. I don't want to live in, you know, a chart and all this other stuff, because that happens with day traders. A lot of times, if you're one of those day traders that are in groups or anything like that, you live in these groups where they're talking constantly and giving you signals and all this other shit, you know. And it's like, I don't want to do that. I just want to put
not my signal, but I understand what you're saying. There is I'm gonna be honest with you though. In order to really get good, there is a part of it, a phase of it, where you really do got to get.
Oh, sorry. Repeat that. There is a what phase?
There's a part of this where you really do have to get knee deep in it to really get to next level understanding. And I encourage everyone to. I teach from the day trading perspective, because what happens is these cycles happen. Like I said, the same cycle you see over 100 years, you'll see on a 1 hour and a 1 minute chart. You see it all the time. And so day trading forces you to come and to engage that cycle, to recognize that structure and make a decision on, is this a good trade or is this a bad trade? So you get many more repetitions of that thought process by being a day trader. Whereas if you are a swing trader, you're only making a trade once every, you know, several months, then your mind isn't going to get sharp enough. Your eye is not going to get sharp enough. What the thing that people are learning is they're learning to see differently. There's certain setups and patterns on the chart that the more you look at it, the more you go through this process, you begin to see it. It's I can't really explain any better. It's like you have to train your eye to see what's been right in front of you all the time.
It's like that Ethereum and BTC chart where I can look at it and saying like these points or these ranges look the fucking same.
Right.
And it's just the crazy part about it. And it's just like, also, how can you not see the pattern? But I will say my eye is not as trained as a Dollar Will and Lionel, like, you know, in terms of what you all do, because it's even deeper. Because now you can see, like, you know, you're counting the waves.
But if you were looking at some code, you would see. You know, there's some repetition or pattern for what's a safe sequence to for how the signal has to move around within the realm of a computer or this instruction set. It's just more logical to do this before that, and so there's certain like universal macro kind of structures that come into play. And from your experience, you know, you can look at somebody's coding and go, that's not gonna work.
Right.
Or that's going to take too damn long by the time it read. So it's just like that. So it's pattern recognition. That's really what it comes down to.
Most def. And I guess we'll get the last word from Iori here, and also shout out to Keanu. You know, this smart motherfucker here. Trading is not hard.
Well, then he's fucking brilliant.
Yeah, but you know, Keanu's been in it for a long period of time, and I know him personally from WhatsApp and stuff like that, in another group that
he says, "You still in crypto?" I mean, does he mean like you should have been left there? I mean,
Keanu's one of those guys where he's like you. He'll get out, and he's not gonna stay. He's not gonna hodl unless he really wants to. Yes, I am still in crypto, but not as much. And now I'm gonna get back into crypto. I'm definitely not gonna get back into the precious metals market. Fuck that. But yeah, definitely into crypto and what's it called? Also stocks as well. So
he sounds like me. We're in the Al. Good is good. You know what I'm saying?
We're in the Al Green trading philosophy. For the good times, we only there when it's good. Okay.
Yeah.
100%.
Iori, what's up, brother?
Nah, bro. Just, you know, like, everything's already been said, but all I can tell you is you were talking about the coding and basically the democratization of education, right? In terms of how free and how available it is.
Yeah.
Look, if you're gonna do this, get committed to looking at charts. You don't gotta be perfect. Like, I know depending on how much sleep I get, it's not perfect. But the thing is, put the effort out. You know, find a place, whether it's Dollar Will. Obviously, I'm in Dollar Will here, so I'm gonna rep him hard. But wherever you can find it, as long as you can find the right infrastructure to make you successful, that's what's required.
And then once you get it, you can back off and trade as little as you want. It's nothing wrong with looking at that monthly chart, finding a setup. We don't trade just one time frame. Can we look at all the time frames? But there's some trends that happen to start right in the beginning of the month, and you know you can say, okay, in all likelihood, it's going to trend for the whole month. So you can set a trade up and hold it for a month or more. You don't have to jump in and out of it. That's what's beautiful about Elliott wave theory. It gives you a sense of where the huge reversals are likely to happen.
Correct. And you know, another thing I'm going to say is, as you get deeper and deeper into trading, you'll start to subscribe to channels and watch because here's the thing, trading isn't just a job, right? Like, you're going to watch these channels, you know, handful of channels, whoever you want that are technical based, Alessio, Mitch Ray, hundreds of other guys. Those are just the two guys, Ron Walker, 100 guys. Like, if you were to look at my YouTube subscriptions, There are hundreds of traders that are on my YouTube subscription, just watching stuff, because like there's always a portion of time where we get confused, right? Sometimes I might have a bad day in the markets, which doesn't happen nearly as often, and sometimes I need to turn my TV off, walk away, and see what Dollar Will had to say, see what Mitch Ray had to say, see what somebody else has to say, because sometimes having a clear mind in this is important. It's extremely important. And the nice thing about being a trader is once you get your foundation, you really know where to go. You know how to interpret the information. You understand what they're saying, and it's just one of those things that sets you up for the rest of your life, because you're not going to unlearn how to read a chart, which means if you can read a chart, you can find something.
Hey, and that brings up a good point. A conversation I had with Ulysses earlier today, and at certain points in your life, there's certain jobs that you're not going to do anymore. You're not going to work at your low level labor jobs or general labor jobs in your 50s or 60s. A lot of people do, but at the same time, when it comes to trading, that's definitely something that, as long as your mind is there, you can still do that easily into your 50s and sit down. 60s.
That's right. You're fighting Alzheimer's. That's it. Dementia. That's what you're fighting. You're racing to get the bag before that sets in, pretty much.
That's right.
Right.
That's it.
Keanu says oil is going to go to 140. Oil is a good buy. Soft commodities are good to pork, corn, or good too. Pork, corn, cattle are going up. I bought at Lowe's.
Dude, I put a trend line on oil. All that stuff Lionel was showing earlier, all that stuff that looks like a needle shooting straight up. I put a support trend line on it. If it breaks that line, I'm running like hell. I wouldn't hesitate. I would run like hell, because when you see it going shooting up like that, it falls just as fast.
And then he also adds, I have shorts on ARMs, adjustable rate mortgages. Yeah, most definitely, especially now.
Sounds good.
Yeah. All right. So with that being said, guys, thank you so much for joining tonight. Thank you for the sticking around for the extended last words and everything that we covered in this. Something that you said, Dollar Will, is talking about business and getting into business and failures. Definitely, I do have a video about that, and I'll probably put it in the community tab after this stream. I gotta post probably about 3 videos that I just did, and I've uploaded, but I have to actually release them and publish them, or make them public. So guys, watch out for that. Thank you so much for listening, guys, and being a part of this. I think this conversation, we stayed on task, went in a lot of different tangents that all came back to prove a greater point of what you should do in markets like this, how fundamental analysis can have you asked out with no lube, and how technical trading can actually put you in a better frame of mind, and also how it doesn't have to be it doesn't have to be something that is always at the forefront of your mind, but as long as you learn that skill and have that pattern recognition about yourself, you can actually put yourself in a better situation all around. And that's kind of the beauty of learning these skills, where you can sit down at 40-50 and do this stuff on your off time, set up your trades for the next trading day, set it up, and then still work your day job and maybe check on it every so often.
And you can teach your kids this.
Yeah, financial literacy, and not just financial literacy, or not just your basic financial literacy, but expanding on that to actually be more than just financially literate, but be financially wealthy for generations to come. And I think that's kind of the big thing here. In a lot of ways, that's one of the bigger things. That's one of the future things that we're looking at. All right, guys. Thank you so much. As always, love you all. Appreciate you all. Thank you for interacting in the chat, asking questions. Go back and watch the playback if you got in late. But really, thank you so much for joining. All right, y'all have a good one.
Peace.